market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Sequencing the variants in order to understand the prevalence. For now, extremely low of the Delta variant, but we will continue to sequence and to pay a lot of attention to ensure we know and therefore we can respond. But the best cure we have at the moment is essentially to continue vaccinating.
That was Aranches González-Leia, the Spanish foreign minister, catching up with Bloomberg's Maria Tadeo from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Your equity market unchanged on the S&P 500 and a huge rollover, erasing the gains over in Europe. The Stock 600 now flat, was up by close to 1% to kick off Q3. We erase all of that. Elsewhere in the bond market, yields unchanged, 147.47 on 10s, euro dollar 118.56, euro just very, very slightly weaker. Let's not even say that, unchanged on the day. And there's the move in crude, Tom. We approach 75 on WTI, 74.93, up by almost 2%.
76 print right now. There it is, 76 print exactly on Brent crude as well. We'll watch that through the morning. To be blunt, Lisa more on top of that story than I'll ever be. Right now in the pandemic, and this is an honor, Amber D'Souza joins us from Johns Hopkins. She is definitive, I should say, in neck cancer and also infectious disease, a terrific career in medical research. Amber, when somebody mentions the Delta variant, the Delta strain, it comes down to every conversation is the infectious reality. Do you have an understanding?
Okay, traders, as you can see, I need to cancel order to buy euro. It moved too far. Right now, it's already almost 10 pips. So it's not much point to hold it any longer. Please cancel your order. And wait, still, we have still many other pairs. So keep following our trades. As soon as I will see something will be profitable and available to trade, I will let you know. Okay, stay with me.
No, it's within the normal spectrum. This is what infectious diseases do. The more we allow an infectious disease to spread, we know it's going to mutate, and some of those mutations are going to be more transmissible. So this is within the sphere of what we've been dealing with in the pandemic so far. But if you imagine that the strains we were dealing with last year were infecting 2 or 3 people, and this one instead is infecting 4, 5, 6, 7 people, each infected person, we don't know exactly where we are there. It's just slightly worse, and it makes our battle against this just slightly harder.
That's where I wanted to pick up, Dr. D'Souza. How much has the Delta variant prolonged our fight to get to herd immunity?
Well, it really depends what happens in the next few weeks and months. Here in the U.S., the story is different than abroad. We are within grasp of herd immunity. We have made real progress. And, people are continuing to get vaccinated every day, even though it's at a slowing rate. So if we continue, I think we can reach herd immunity later this summer or fall. In the U.S., we are still on track. Things have just slowed. So it is possible, if the vaccination stalls, that we won't reach it through immunization. And the only other way to reach herd immunity is that the infection burns through our population and enough people become infected that they get immunity that way.
Dr. D'Souza, I think I might be slightly traumatized. I hear Tom Keene's voice in my ears saying, I don't know about herd immunity. What does this actually mean? What are we actually talking about? What are we talking about, Dr. D'Souza, considering the fact that a lot of people think that herd immunity is sort of fictitious in this kind of environment?
Well, what we're talking about is preventing people from getting sick, and there's 2 ways to do that. Right? So the idea of herd immunity is if most of the people get vaccinated and aren't transmitting the infection because they're protected, then the other people who are not protected aren't going to get it just by chance because it won't be spread to them. So they remain susceptible, but if we get to high rates of vaccination, say 75, 80%, then the people who are unvaccinated are just not going to get exposed. That is the idea of herd immunity. But of course, if they are exposed, they remain susceptible. So vaccination is the way to be safest, and those who are vaccinated remain protected, including against these variants. Data has shown that the vaccines are working against the Delta variant.
Professor, what is the ultimate goal here? To protect everyone or to treat this like any other virus? The seasonal flu, say. What's the ultimate goal, the objective?
Well, we don't have to get to 100%, but the goal is to, in my view, to protect lives, not just from death, but also from all the side effects that illness can cause from this infection. And to do that, we have to get the bulk of people protected. So we've made tremendous progress over these next few months, but we're not there yet. We could still have additional waves of infection at our current vaccination rate. They won't be nationwide, and they won't be as bad as what we saw before because we do have high vaccine uptake among our oldest individuals. So we know we will not experience what we did last year, but we could still have localized waves. There are states where only half of people are vaccinated, and they could still have, huge surges. The hospitals aren't going to be overwhelmed, but there still could be quite a few people getting sick and dying, in those states where vaccination.
Well, Doctor, I understand why people don't like to ask these questions, because being seen on TV asking these questions is sometimes not very nice, but that's part of the job. Mm-hmm. I don't remember that being the objective 12 months ago. And we live in a country in America where you have the luxury of getting a vaccine if you want one. So why does the rest of the country need to worry about the few that are deciding, I'm not interested, I don't want one?
Oh, interesting question. So my answer to your question is from a public health view. I'm concerned about everybody's health in the public. But you're right. Once you're vaccinated, you are protected. You can travel on a plane. You can, be unmasked now in most areas according to our laws. Why do you need to worry about everybody else? Well, it affects our economy. It affects health costs. I mean, what happens to other people does affect us. So, it is a personal health decision whether or not to get vaccinated. I believe there are still lots of people who haven't gotten vaccinated, not because they are against the vaccine, but because it needs to be easily accessible. There needs to be an incentive or a reason for them to get vaccinated, and we can still reach those people and get them vaccinated. Other people who feel strongly that they don't want to get vaccinated, that there are people who have that view and will choose not to get vaccinated, and we'll see how many that is.
Delicate issues, I know. Doctor, appreciate your time. Really do. Dr. Amber D'Souza there, the Johns Hopkins Bloomberg School of Public Health Professor of Epidemiology. I want to turn to this market. WTI with a 75 handle for the first time since October 2018. Here's the price action right now on crude, up by a little more than 2% on crude right now. We advanced $1.50 to 74.98, just south of that line in the sand. We did break it, Tom, briefly, 75 for the first time since 2018.
Spread comes in. WTI very close to that 76 level on Brent crude, the global price, John, as well. It's just one indication of inflation. I'm watching DXY at the same time for a dollar breakout. We've had that in the last 24 hours, but maybe we get it again here with DXY 92.44.
Lisa, this is after a 50% plus move through the first half of 21.
And it comes on the heels of news that Saudi Arabia and Russia have reached a preliminary deal on raising production that's below where people thought through the rest of the year, so less supply than could potentially be brought back online.
TK, there was a usually that's followed by something really important.
John, the Twitter is heated up. We need to inform Mr. Farrow the availability of the 1,776 pack of PBR.
Nice.
John, you get the linkage there into 1776.
Thank you, Tom.
It's when the colonies said
Perfect this morning. Lovely.
excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more. They might just need just some practical experience in an Australian kitchen.
I have not from Australian friend now, but in the kitchen I have many friends.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
As this global recovery is unfolding, investors need to think more global in their portfolios as well.
There's quite a bit of momentum, and it's going to spread out into 2022 and 2023.
You may even start to see some deflationary forces kind of work their way back into the system.
The Fed now needs to transition and think about risks of higher prices, higher inflation.
The pressure will grow on the Fed to announce QE tapering. I think the debate at the Fed is shifting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Welcome to Q3 from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures in a single point on the S&P, 42.87 on the S&P 500. Tom Keene coming into Thursday. 5 days of gains, 5 months of gains, 5 quarters of gains.
It's going to recalibrate right here with claims today, jobs tomorrow, and then on to the earnings season, John. And I'll tell you, this interview we've got coming up with Mr. Skelly of Morgan Stanley is important. Their note is blistering as they push against the gloom crew.
Well, let's get to the labour market. We're looking for a little more than 700,000 in payrolls tomorrow morning, Tom. At the top end, 1050. At the bottom end, 400K. I believe Morgan Stanley in and around 600,000 going into tomorrow.
I'm going to look at wage gain. Morgan Stanley, and I'm getting out front of our conversation with Dan Skelly, but they look for, quote, wage gain potential, and that would be something that would really push against the gloom.
Always looking for balance here, aren't we, Tom? Just a little bit of optimism mixed with, Lisa, just a little bit of gloom.
All right, listen, let's talk gloom crew, okay?
Please.
Gloom for who? And this, I think, is key because, honestly, pushing back perhaps a bit against the gloom around the economy, talking about higher wages. But what does that mean for companies, especially if that eats into margins? Can we get economic growth and, frankly, a much brighter outlook for the economy that doesn't necessarily bode as well for riskier assets? And I think, John, that is the discretion here that we need to be very clear about.
Can you do the weather again? I love that. It's deadly out there.
Well, we were talking about the heat. We were putting it into perspective, and it's...
I know.
It's serious.
You're making a good point. I'm just joking.
I know.
Equity futures this morning, down 2 on the S&P 500, 42.86
Lisa,
on
John,
the S&P.
Folks...
You're going to let me carry on,
No,
Tom?
I'm not. This is important. This is more important.
74.92
On July 1, 2021, John, when did you first experience air conditioning? Were you 25 or was it 27?
When I moved here, because let me tell you, in the south of Italy, growing up, when I spent my summers there was no air conditioning.
Yeah.
It was the window with a mosquito net. And in the UK, Tom, summer's 2 weeks. It's just 2 weeks, and it falls somewhere between June and August, and you don't invest in aircon for a 2-week summer.
It sounds like Rochester, New York. Continue, John.
Thank you, TK. 74.92
the
on
Tang
crude.
is good today.
We had a little look at
for the
75.
second half. We got a new bottle of Tang.
Judging by the last hour, that is not Tang. 147.81 on 10s, yields up a basis point. Lisa, euro advancing, euro dollar 118.68, positive about 0.1%.
Perhaps just bringing things back to a less gloomy look. For the day ahead, 8:30 a.m., we're getting U.S. initial jobless claims. The expectation is for it to be a new post-pandemic low, 388,000. I am going to be culling the data to see what effect the end of some of these enhanced unemployment benefits may have to push people more into the labor market. Very messy data, very politicized. However, something that definitely will be a talking point going forward. Also today, OPEC Plus is meeting to consider output boosts. We have already heard reports that Russia and Saudi Arabia have formed some sort of agreement about raising production. It has raised prices of oil to the highest since 2018. Why? Because these production increases are not as big as many people thought. That is the early reporting. We will get more throughout the day. And today, U.S. auto sales are going to be released for the month of June. The expectation is for this actually to be lower. Fewer cars sold. Why? Not because of lack of demand. It's because of lack of supply. It's because of the chip shortages that leave a lot of dealer lots less stocked than they have been for years, John, and it really has raised prices astronomically. I mean, if you look at some of the increase in prices, I mean, $40,000 for an average car.
Do you think we work some of those issues out in the back half? GM had a wonderful start to the year, up by more than 40% year to date.
Well, and this is because they are earning a lot more money because of the prices going up as much as they have. However, the guidance has been from the C-suite that it's going to take a while to really work through some of these kinks. So I don't know. I think it'll be interesting to see what guidance they give.
Dan Skelly joins us now, Morgan Stanley head of equity model portfolio solutions. Tom had a little promo for Dan earlier. Morgan Stanley as a house over the last year pushed back against all the gloom. They were out front on this sharp, quick, strong recovery. And Dan, I wonder, and good to see you, by the way, whether you remain committed to that story.
Likewise, great to see you, Jonathan, and team this morning as well. Thanks for having me. And the answer is yes, we are still committed to a longer-term bull market, a secular bull trend. That being said, we think in the near term, specifically over the next 3 to 4 months or so, as we get into the summer months here, we think we're due for a pause or a pullback. And you've seen that, right? The last 6 or 7 weeks, the market has struggled to really break above this 4,200 level on the S&P. And I think what the market is starting to recognize is that all of the good news can't be good in every single way. And specifically, as you called out earlier on the show, we are seeing rising cost pressures. And we are concerned in a way that the market is not, that some of the labor costs and the rising wages may be more sustained than people think.
Dan, your note is blistering. It's the most optimistic long-term note I've seen. The only thing even close is Folkers Landau over Deutsche Bank. I want you to tell me what the Shallot-Skelly 2026 looks like. We don't do that enough on TV. We don't go out 5 years. What does your 5-year look like for equity markets and total return?
Yeah, so we're assuming that markets continue to struggle in the near term, literally over the next several months, but that we're making new highs next year, Tom, and into the 2026 kind of region as well. And listen, I think the genesis for that outlook is as follows. Number one, when you think about the strength of the consumer, you know, unlike 08, which we saw the recovery kind of basically impeded by a weak consumer and by a deleveraging in the consumer, this time around we're seeing a very strong consumer, and we're seeing that manifest.
Traders, I'm placing an order to buy
may slow
Japanese yen.
Levels, and
the price I'm looking to buy 111,448.
That's still a multi.
If you're looking to trade Japanese yen,
you know, strength to the
price you need to place an order 111,448.
You know, look, we think any pullbacks or any pauses in the market.
I'll let you know when this price will be filled. What we're going to do next.
For which is we
stay
have
safe.
A whole new generation of investors coming into the equity market after 10 years of really trying to restructure their personal balance sheets. The millennial generation is in very good shape. And after having delayed many of the adult things they had put off, such as starting families, buying houses, investing, they're now starting to do all those things in size. And the very last thing I'll say, Tom, which is kind of unique unto this cycle and recovery path, versus previous analogs is think about everything going on in corporate CapEx spending and digital transformation. We've all talked about this. Your show has highlighted this. COVID was a massive digital wake-up call. And unlike previous downturns where CapEx spending and research spending really never recovered or became a positive catalyst, we actually see that as a key driver going forward. And we see that as a positive net catalyst to economics into the market.
Dan, I got to say, there's a lot packed in there, including calling millennials, saying that they are now starting to do adult things, which I thought was a fantastic little aside in there. You said that we're due for a pullback. In what, though? Because we've seen this rotation back and forth, and recently it's been back into growth and away from value. Where is the pullback going to be concentrated in the next couple of months?
You know, it's a really interesting question, Lisa. And what I would highlight there is I think what the market has signaled in the past couple of weeks here will probably continue. So I do think there is a realization here that the...
Okay, guys, position opened, as you can see, on Japanese yen, 111.448. Stay with me. We'll finish this trade in profit. So if you manage to get into this trade, well done. If you want to find out what is going on, how we trade, you need to go to company.co.uk and you need to get our strategy. Okay, for all information, you need to go to our website and just get the strategy. Otherwise, stay with me and let's see what's going to happen with this pair, and let's follow this momentum. Yeah, this pattern, this pair. Stay safe, guys.
How are they investing? Is it passive and through the index level? What are they doing? What are you identifying?
Yeah, Jonathan, we're seeing a lot of very interesting trends. And as you know, as the world's largest wealth manager, we have a particularly unique vantage and sort of line of sight into this trend. So I'll say two things. First, number one, this trend is very similar to what the boomers went through when they started to first reach 40 in the mid 80s to late 80s. They too were underinvested. They had about 6% of overall asset allocation in equities. And what you saw over the next, call it 5 to 10 years, is the boomers started to become more fully invested. They had upwards of 30 to 40% of their asset allocation in equities. Same trend today. When I look at the millennials, about 5% of that cohort is holding equities. And again, we see that percentage increasing substantially over the next several years. In terms of how they're investing, Jonathan, clearly impact and ESG is one of the key trends that we want to obviously look for smart investments that are aligned with our values. So that is something Morgan Stanley has certainly invested in and led the way, and I would argue in the last decade or so. The other thing I would say is index investing, to your point, looking for different types of economic trends as well, or economically feasible investment trends. That's another thing we've seen.
Hey, Dan, good to catch up. As always, Dan Skelly, Morgan Stanley, Equity Model Portfolio Solutions Head. Tom, just a little bit of insight, a line of sight into what's going on at the moment. Some new entrants in this market over the last 12 months.
The tone of the note, and of course, folks, that's a theme on it. July 1 is they've got the courage to go out longer. I think, and I don't want to link the two together, but John, Doug Cass was a piñata over saying Amazon out to 5,000, which from here is about a 7% gain out to 2026. And we don't do that enough, John. We don't get the vision out 2 years, 3 years, 5 years. And Lisa Shallot and her team have, the courage to do that.
Not a single sell on Amazon. Not a single hold on Amazon. There are 55 buys on Amazon. And the 12-month price target, Tom, 42.50.
Yeah, I mean, Cass may be short Amazon now like he's short the Yankees, but out longer, he goes longer.
Did you just throw shade at the Yankees?
Yes. Yeah, official John Nuno signs with the Tots. He spurns AFC Richmond.
Thank you, Tom. Keep those football updates coming.
Thank you.
Is that confirmed, just in case there's some real Spurs fans out there?
Twitter. It's out there. Tottenham Hotspur. Okay. Spurs official.
All right.
I got a heads up.
In the next hour.
I knew it was coming.
It's Yardeni Research President.
I talked to Harry last night.
Tom, I've worked with you for so long, I still don't know whether it's true or not when you speak.
You sound like an ex-wife.
42.89 on the S&P. Head on radio, seen on TV. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The Trump Organization's longtime CFO has surrendered to authorities in New York. Alan Weisselberg faces tax-related charges. So does the company itself. It's the most direct attack on Donald Trump and his company to emerge from a years-long criminal investigation by the Manhattan District Attorney. The White House is ramping up pressure on Republicans opposed to that bipartisan infrastructure agreement. Starting today, the administration will spotlight crumbling roads and bridges on a state-by-state basis. The new funding could be used to rebuild them. China's President Xi Jinping sounded a defiant tone today in a speech marking the 100th anniversary of the country's Communist Party. Xi called China's quest to gain control of Taiwan a historic mission, and he warned that the country's enemies will break against a, quote, steel Great Wall. Citigroup CEO Jane Fraser says that almost all of the bank's employees will return to the office. Still, she says there will be a blended approach that allows for some flexibility. Earlier this week, Citi said that its policies allowing some work from home would give it a competitive edge in recruiting and retaining top staff. Robinhood reportedly plans to set aside as much as 35% of its shares in its IPO for individual investors. That's a bigger percentage than normal. Dow Jones says the stock trading app wants people to sign up to buy the shares on its new IPO platform. Retail investors are largely shut out of IPOs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg Bloomberg.com webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
There were lots of young leaders, the next generation of financial services leaders in the audience, and I was speaking to them after the event. And you talk to all of them, they are all super excited to get back into the office on a more full-time basis. I think it's very important for young people at the start of their careers to have all those benefits. And I hope as we make progress towards our July 19th step and safely take that step, we can get the city humming back to life as we all want to see it.
That's what we want to see, the City of London getting back to it.
Radio. Wow.
Isn't it beautiful? Rishi Sunak there, the UK Chancellor of the Exchequer, catching up with Anna Edwards a little bit earlier this morning. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Equity futures right now, 42.89 on the S&P, unchanged on the session, and your bond market, 147.47. Yields higher by almost a basis point. It gets your attention, 75 on WTI, the first time we've seen that since late 2018. Crude advancing, Tom, by 2.3%.
Very cool. Right now we're going to digress again. Yardenian Saunders coming up with us on the equity markets here in a moment. What you don't know is here at Surveillance, we have hardwired in red phones by our bed. My phone rang at 12:43 a.m. It was Farrow on the phone. Look at the rank numbers on the mayor's race, because those numbers came out late last night. Shelley Banjo drives all of our coverage on New York City and, of course, running the shop here at 731 Lexington. Shelley, I want you to take the observation that Garcia, sanitation engineer, really came up nicely against Adams, a former police officer, but bring it right forward to 125,000 absentee ballots. Can you go through that exercise?
Yeah, so what we're waiting on now is to see this pretty big proportion of votes that we're waiting on, about 14%, to see who came in for whom. And if it mirrors what we've seen so far with Election Day, then what that means is it could really tilt it for someone like Catherine Garcia. But in the end, after you do all those tabulations that we got last night, the difference between Wiley and Garcia was only a few hundred votes. So the absentee ballots could actually also change it for Wiley as well.
Well, I'm assuming, folks, this is Adams, the former police officer, Garcia, the sanitation engineer, Miss Wiley working for Mayor de Blasio. Fine. Is Wiley still in the race, or is it a 51-49% race?
So the issue with what the data that we got yesterday was that it was just based on Election Day and early voting. So Wiley's still very much in the race. She's not going to drop out. She's saying we're going to wait until all the absentee votes are counted.
So what is the daylight between a Mayor Adams and a Mayor Garcia, Shelley? Just zooming out a little bit.
She cannot hear you. Let me ask the question for you right now. Lisa does that. She's from the Upper West Side. You can't understand her because of the accent. She wants to know what the difference is right now, the delta between Mayor Garcia and Mayor Adams.
So what happens with the ranked choice voting is they tabulate it all the way to the end. And so right now there's just about, once you count all those votes, there's just a 2-point lead between the two of them, which is just not less than a 2-point lead, actually.
But you just told me Wiley's still in the race. How can that be?
Because all it was yesterday, the release was, an exercise of what the outcome would have been if the absentee votes weren't included.
Do you know who are the absentee votes? Are they people that were heading out of JFK on some fancy business trip? Are they, what's the character of those people?
It's pretty distributed around the city, but if you mirror the districts that are absentee and the districts that voted in Election Day, about 44% of those had gone for Adams. So, it depends if people end up voting absentee the same way they voted on Election Day.
I believe Lisa Abramowitz is with us now.
Yeah, with my horrible accent. There's a question, Shelley, going forward about whether you're expecting to see any kind of surge in the Republican candidate, or is this just going to basically be a Democrat-only kind of race the way we've seen in New York City traditionally?
Because there's about 7-1 Democrats to Republicans in New York City, and the Republican candidate that has won, Curtis Sliwa, is not, a more moderate candidate that could appeal to a lot of.
We haven't gone there yet. We're going to stop the show here. And for those of you internationally, it's real simple. Where's the romance of John Lindsay? What happened?
Yeah, I mean, the city, I mean, people could complain about that, you know, there's thousands, tens of thousands of Republicans that actually re-registered in the city ahead of this race as Democrats, even though they voted Republican.
They couldn't find a John Lindsay to run?
Well, yeah, I mean, that's the issue for the Republican Party in New York, is that New Yorkers, there's a lot of moderate and Republican New Yorkers. They just don't find the candidate that they want to vote for.
Did they go for Mr. Adams then? I mean, I thought the coverage, and I thought Tom Edsel in the New York Times yesterday was absolutely brilliant, breaking it down by boroughs as well. Let's take it nationally. What does it symbolize for the Democratic Party nationally?
I think nationally the issue is pay attention to crime. And, you know, President Joe Biden has realized that this is an issue and has, you know, been addressing it nationally. But in the midterms, like, this is going to be an issue. Crime is up in cities across the country, and it's going to continue to be an issue.
What's your date on this? When do we get absentee ballots?
So I think the date to watch is Tuesday. So we'll come back from the holiday weekend in the U.S., and Tuesday we'll get a new batch of data that will most likely include the absentees. And even if the Board of Elections doesn't call it, the AP might call it on Tuesday.
Can you come back on Tuesday? Maybe Lisa can talk to you?
I'm here for you.
Okay. Thank you,
Shelley, thank you. I'm not sure if Shelley can hear me, but thank you, Shelley. Shelley Banjo, our New York Bureau Chief. Can you thank her, Tom?
Yeah, thank you. Mr. Farrow thanks you as well. Lisa doesn't thank you, but John does.
This is just high-end radio and TV, isn't it?
Shelley's like, I'm staying in print.
Good idea. 75.15 on WTI. Crude advancing a little more than 2%. Here's the debate with OPEC Plus right now, debating 400,000 barrels a day of monthly output hike from August to December. They're debating extending this production deal to the end of 2022 as well. Just a couple of headlines coming from a delegate of OPEC Plus, Tom.
Yeah, it's important. I think Anne-Marie Horton's in Washington now, so Lisa, I see Lisa in Vienna.
I see that.
I see it.
I see that.
I'll head over there.
Then you can go to the Austrian Central Bank, too. They might be aligned with your views on monetary policy as well.
They could clip the coupons on my 100-year paper.
Look, with respect to oil, this is actually important. The 400,000, just to put into perspective, is well below the 500,000 or more that was expected in terms of increased production, which is the reason why you're seeing a boost to oil prices. Basically, less supply than could potentially have come back online, John. So just to give a little perspective there.
Yeah.
But it's really a delicate dance, especially because you don't want to push people further into EVs and renewable energy by allowing prices to go too high.
John, we got to rip up the script. Translate what in God's name is going on in the United Kingdom.
Well, I'll do my best to translate, Tom. I'll just bring the headlines first. This from Prime Minister Boris Johnson. Extra precautions may be needed after July 19th. July 19th is the line of the sand for anyone in the UK right now. The Prime Minister saying the government may keep some COVID precautions. This is an interview conducted in the UK in the last couple of moments. The headlines have been released. We will set out details in the next few days on the pandemic. Tom, we talked about this about a week ago. Overwhelmed, overcome by events, and the Delta variant is really shaking things up in the UK. The good news so far is that even with this explosion in cases, if you might describe it that way, we haven't seen the same move in, say, hospitalizations, and certainly not deaths either.
Just interesting to see nation to nation, even the struggling nations like the Philippines, South Africa, and such.
Yep.
Just every story is different.
We should frame that last 5 minutes on this show. 42.89 on the S&P. That was special, wasn't it?
Puppy. Have a PBR, John. We'll go down to 1,707.
Yields 147.47 on TV and radio. This is Bloomberg.
we're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
From New York City for our audience worldwide, live on TV and radio, here's the price action. This Thursday morning, equity futures 42.89 on the S&P, advancing a single point on the Nasdaq, pulling back by 22. We're down by a little more than 0.1%. I wanted to talk to you about confidence. This is not a therapy session, don't worry. I want to talk about confidence in this market, confidence in the C-suite. And I think one of the most important headlines earlier this week came from United Airlines, ordering 270 jets. That, Tom, shows you confidence of the C-suite that things can get back to normal sometime soon. I'll show you something else that shows confidence. Switch up the board and get to the labor market. This is a story of job openings in America, north of 9 million. Now, a lot of people have used this data point to say, look at this big gap between supply and demand right now. I think the demand tells you something about confidence. And what you notice about every single recovery, every cycle, is that job openings keep climbing through the recovery. Confidence. Finish on this. The quits rate, confidence, sky high. In the bond market, do we start to see those signs of confidence? Subhadra Rajapra of SocGen has given us the forecast. She's looking for a move back to 2% on a 10-year. By year end, we're at 147.81, and back to 0.1% on a German 10-year. Right now, we're negative 18 basis points. That's the kind of confidence that we see in the C-suite, we see in the labor market, and not just the employers, but also the employees who are choosing to quit their jobs. Will we see that confidence slowly reflected again, Tom, in the bond market into year end?
Well, it's the dynamics of the bond market. And again, I'm going to go to the spread market. Lisa's smarter at this than I am. But, I got an immovable real yield. John, are you doing the real yield tomorrow?
I will be doing the real yield tomorrow.
4th of July real yield.
Fortunately, Italy will be playing at 3 p.m. Eastern time.
Right.
And Bloomberg real yield is at 1.
And in England, Ukraine on Saturday. For the folks you want to watch the real yield over the weekend as it plays, real value add is
like the show, Tom. That tangent.
Yeah,
super value add. I think Taylor Riggs is standing by patiently. She got up early for us this morning, Tom. Let's head over to Taylor now and get some movers. Hey, Taylor.
She only does tech stocks.
Let me try to give you some value add, John. This time, of course, within the chip shortage space. Yesterday, after the close, some really interesting news within that chip space. First, of course, coming from Micron. Now, the earnings a little bit of a disappointment, but analysts still really, really loving this stock. In that press release, we also got some other really interesting news as it relates to selling their Utah factory to Texas Instruments. Now, analysts really liking this deal for Texas Instruments, saying that they're really positive. Oppenheimer saying that this will boost the company's domestic manufacturing. Susquehanna noting that this really shows the size and the extent of some of those chip shortages. Texas Instruments really trying to get ahead of that with this deal. Chip stocks, as you can see there, not reacting really positively on what analysts are describing as a positive deal. Let's change the board and hope that we can get some green on the screen. First, of course, coming from General Motors, we might get some of those auto sales this morning, so keep your eye on what might be a good second quarter report from that. Of course, the big news, WTI at $75 a barrel. So look at the read-through that we're seeing with some of these other stocks. Occidental, ConocoPhillips, Marathon Oil, UBS this morning upgrading Marathon Oil to $16 from $11 a share, Tom.
Taylor, thanks so much. Greatly appreciated. It is July 1, and we need to look forward as we look back as well. We start strong with Liz Ann Saunders of Charles Schwab, of course, with her wonderful work. Liz Ann, I love what you do on Twitter. It's a brief for the world, really wonderful proprietary stuff as well. And, of course, Liz Ann Saunders, always bold, says past performance is no guarantee of future results. Okay, Liz Ann, go there. What do our future results look like?
So I think that the bond market continues to be probably the most important signal for the equity market, not just in general terms about what the 10-year yield says about inflation risk, but leadership has really keyed off what's going on in the bond market. And I think that will continue to be the case. And I think if we do get another leg up in yields, then you probably see more of this rotation back toward some value factors. Obviously, the latest trend has been more toward the growth factors.
Liz Ann, this is a really important question. I mean, I have great respect for the idea past performance is no guarantee. But the way you solve that is to take a longer-term view. The markets today and the modern social media and all the analysis is a long-term view of, let's call it 3 weeks. What's your view so you get beyond the stress of past performance is no guarantee?
Well, I think what's key right now, and I don't know that anybody knows the answer to this, is did the pandemic just sort of pause the cycle that was in play both on the economy and the market up until February of last year? Or did it end one cycle and start a new one? Because where we are, in particular in the economic cycle, whether or not it was just put on ice and we're back could mean that we're much later in the cycle. Or did we really just end the prior cycle and start a new one? Then I think we have a much longer runway. And I think we'll start to get answers to that in the next few months when we move past the base effects in terms of both economic data as well as inflation data.
So, Liz Ann, you think that inflation and in terms of just sort of GDP figures, that will sort of give us a sense of where we are in the cycle? Is that what you're saying?
Well, I think we have to get into early fall. We've got September is really important for a lot of reasons, not least being the full expiration of the enhanced unemployment insurance in states that didn't end it early. Hopefully everybody's going back to school. The churning in the labor market. Before you brought me in, you were talking about the massive surge in quits and hiring, but there's a mismatch. And I think some of the funkiness in the data, the base effects associated with inflation, some of the seasonal calculation problems within the labor market data, I think start to ease as we get closer to that early fall period of time. And I think there'll be just more clarity starting at that point on many of these metrics.
Liz Ann, a lot of fund managers do not have the luxury to wait for clarity before they make a move. And there's a question of how to double down on a position when there is such a murky backdrop, when people are waiting and will continue to wait for months on out to determine where we are in the cycle and what the forward look at inflation is. So, Liz Ann, what are the balance of risks here? How are you positioning heading into the next couple of months?
I continue to think the factor decision is probably the most important, even beyond decisions around style indexes or sector decisions. In fact, what a lot of people don't realize in the midst of this growth versus value debate is that if you screen within sectors, regardless of sector, for value factors relative to growth factors, the outperformance of value, so to speak, over growth is actually higher in the growthier sectors like communication services and consumer discretionary. So you can actually, when you say and I believe you want to focus on the factor of value. That shouldn't limit you to utilities and energy and the classic sectors that are in value. In fact, utilities are quite expensive right now. They're still housed in the value indexes. So I think you can focus on value, which I think is important in a rich market, but don't put blinders on in terms of where you look for that value. You can even find it in growthier parts of the market.
This is a really, really important discussion, folks, about sector analysis and the gammas, alpha, beta, and all the Greeks rather, alpha, beta, and as Ms. Saunders says, the factors that are out there. Liz Ann Saunders, is earnings a factor, or am I too quaint?
No, it's a factor. I mean, long-term earnings growth is a classic growth factor. And, specific to earnings, since we're a week or two away from starting to see second quarter earnings in earnest, I think that the most important focus within earnings season is maybe not on the actual EPS growth number, but profit margins and what companies are saying about the stickiness of wages, whether they're passing on higher input costs. Because that's the big unknown right now, and I think the profit margin piece of what we start to hear from companies will be in more focus than is typically the case.
We started the conversation talking about how the bond market has signals and is speaking loudest. How much is it signaling something that is a lot less optimistic than what you're talking about? How do you dismiss that message?
Well, if it's simply a message about inflation being somewhat transitory, to use the Fed's terms, that's not a bad environment if we don't lose the growth piece of this, too. And, what a lot of people don't realize is that inflation in a low growth environment is pretty toxic to equities. But rising inflation in a strong growth environment is actually not a bad situation. So this focus on inflation in a vacuum without understanding the growth backdrop, I think misses the distinction between an inflationary sort of boom and then an inflationary bust.
That's a really important final point, Liz Ann, and we've got to leave it there. It's always great to hear from you. Liz Ann Saunders there, Charles Schwab, Chief Investment Strategist. Looking back at the past month, I want to pick out one sector that's really struggled, the airlines, down by more than 11% through June. And we're getting some headlines from the Prime Minister's spokesperson in the UK, who has briefed reporters and says that Prime Minister Johnson and Chancellor Merkel will discuss international travel Friday, tomorrow, that they're in talks with the EU on vaccine certification. The Prime Minister earlier this morning repeating something he said before in the last week, that the double vaccine doses will be a travel liberator. Here we are in July 2021, Tom, still trying to figure this out.
Yeah, and what's so important here is what matters. And it doesn't matter what I think or John or Lisa thinks or any of our listeners or viewers. The medical pros say all that matters is double vaccine. I look at two statistics every day, John, on the cover of the Washington Post, percent vaccinated. They got a nice cute bar chart, 45, 45.1, 45.2, and we got to do that onward, and there's something else at the FT. I look at the bottom line, John, it's just about getting vaccinated, and all the corporation and governments are going to line up for this to get things going.
It's far more nuanced than that, unfortunately, and as an example, I'll make it personal. My family, for instance, right now, my mom has had the Pfizer vaccine, double-dosed. My sisters have had the AstraZeneca vaccine, double-dosed. So even if the United States opened up travel for them to come in, and they can't come in right now because they don't have a green card and they're not a citizen. Tom, even if they could come in, the AstraZeneca vaccine has not been approved in the United States of America.
Yep.
So who do they let in? Do they let people that have had a double dose of Pfizer? Do they let people in who have had a double dose of Astra? This one isn't clear cut at all.
Okay, I'll go with that. But to the point, and John, I think you said this in the vicinity of a year ago, let's go.
Oh, totally.
And we're unable to go because we're afraid of hurting a select group of people's feelings. And in the meantime, we've cratered international travel.
And the new concern, Lisa, is the Delta variant on top of all of that.
Yeah, although if people are protected with the vaccinations, why not just allow people in, because it's already circulating pretty much everywhere?
I'll tell you what I really think in the commercial break. Coming up, 8:30, Constance Hunter, KPMG Chief Economist from New York City, 4293 on the S&P, kicking off Q3. Good morning. This is Bloomberg.
With the First Word News, I'm Ruchika Gupta. For the first time, a multi-year investigation of Donald Trump's company has resulted in criminal charges. This morning in New York, the Trump Organization's longtime CFO, Alan Weisselberg, surrendered to authorities. He and the company face tax-related charges. Neither the former president nor his sons are expected to be charged. A federal judge has blocked Florida's new law penalizing social media companies for barring political candidates. The law was to take effect today. It was signed last month by Republican Governor Ron DeSantis. The judge ruled that the law violates the First Amendment and doesn't apply to all social media providers equally. New York City, Eric Adams saw his lead over Catherine Garcia grow smaller in a corrected vote count for the Democratic primary for mayor. That came a day after the botched release of erroneous ranked choice voting results plunged the count into chaos. The race will likely be decided by a count of 125,000 absentee ballots. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ruchika Gupta. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
expect this rise in inflation to be a temporary feature of the bounce back. It's important not to overreact to temporarily strong growth and inflation to ensure that the recovery is not undermined by a premature tightening in monetary conditions.
That was Andrew Bailey there, the Bank of England governor. Tom Keene, were these the Mansion House speeches today? Already, is that what Mansion House looks like these days?
I don't know. I just can't. I conflate it with the 4th of July, and the two don't conflate.
They don't go together. Tom Keene, Lisa Abramowitz, Jonathan Ferro. This is Bloomberg. Your S&P 42.93 on the S&P. Your bond market 147.64. Yields are higher by about a basis point. Euro dollar not doing much this morning. Firmer euro stronger 118.73. Crude gets your attention. It now has a 7 and a 5. 75.29 on WTI. We advanced, Tom, 2.46%.
It's a thoughtful data check.
Thank you, Tom. I appreciate that. Thanks.
Watching Tuesday's
getting on.
Under 120 basis points would be a big deal. Ed Giordani's going to be with us here in 11 minutes. You're going to want to see that as we frame for July 1st. Right now, we reframe to the relationships of the market and all of the bond vigilantes of Mr. Giordani. We talked to chart vigilante David Wilson here. And you're looking at tech stocks.
Right, looking at the relationship between specifically the S&P 500 Technology Index and the 10-year Treasury yield. It's a comparison that Liz Ann Saunders over Charles Schwab made on her Twitter feed earlier this week. Yeah, I mean, she puts out a lot of charts in the morning. They're pretty insightful. And this one kind of got my attention because, you know, what we're seeing lately in terms of this relationship is very different than what we've seen over the past couple of decades, more reminiscent of that dot-com era in the 90s, where in fact you are seeing a negative correlation between tech stocks and bond yields. You know, looking back 200 trading days, so you're getting a better part of a year as far as that goes.
You call your chart buy. Are you channeling in sync here? Is that what you're doing?
Something like that.
It's great. I mean, I love how you're taking it back to in sync, and that takes us back to 2001. Is there 2000 to David Wilson? Is there a 2001-ish element to where we are right now?
Well, you could argue, at least in terms of this correlation, it's more like where we were before 2001, because you're talking about the most negative the correlation has been since October 1997. And we were in the middle of the dot-com era back then. You know, tech stocks were just taking off, and, you know, whatever was going on in bonds didn't seem to matter all that much, you know, because there was so much focus on the development of the internet. And we're kind of back there to some extent now. I mean, certainly people have tried to make that comparison between, you know, the current surge in tech companies in the broader sense, not just the ones in the technology index, but, you know, where we were in the 90s.
Dave, this is a totally different period than the 1990s and the early 2000s, because what we're looking at are companies that are behemoths of cash production. They are generating so much cash, they don't know what to do with it. They are basically the sizes of medium-sized nations here based on the cash generation that they have. The reason why they have been correlated negatively so strongly with yields is because they are havens, right? So when yields go down and people have a less optimistic look on the economy, they go into tech stocks. At what point does that cash generation give them a boost, even when Treasury yields or if Treasury yields ever rise? I mean, how much are you starting to see a little bit of a fissure around this connection?
Yeah, I mean, that's kind of where we are now to some extent, Lisa. I mean, the way that things have changed in terms of this relationship, you know, because there was a whole school of thought, you know, that Treasury yields were going to go up and tech stocks were going to go down. At least in the past couple of months, that sort of popped up. And that would imply what we're seeing in terms of a negative correlation is going to pan out. But it really hasn't happened to this point. You know, it's interesting how things have shifted. You know, tech stocks showing more strength, and, you know, Treasury yield kind of stalled out at this point.
David Wilson, thank you so much on the correlations there. Buy. John, you know, I mean, frankly, you make a joke about it, but the bear market crew is going to be showing the door here.
Just in the interest of accuracy, Buy, a song by NSYNC released on January 18th, 2000. just a year ahead of when you said, Tom. Just to be clear,
that's okay.
just in case there are some diehard fans who were very interested in the third studio album, No Strings Attached.
I'd heard it 4,322 times between then and
bet
March.
you did.
I know that I can't take no more. It ain't no lie. I want to see you out that door, baby. Bye, bye, bye.
The Google searches on this show. I feel like they should have their own Twitter page.
This is what's special about
No,
this
but
show.
you got some bear
Surveillance Google
markets.
search.
You got a bear market strategist who's being read this tune this morning.
Bye,
I
bye,
want to see
bye.
you out that door, baby. Bye, bye,
But there's
bye.
always career risk involved, Tom, and you're right. And I believe that period is a fantastic example of career risk as well. That if you called the bubble too early, this is too, Lisa, you're right. If you called the bubble too early, you got in trouble. That's always true, Tom.
I'm just thinking about the tech people on that disastrous interview with Shelley Banjo. You talk about career risk.
About 30 minutes ago.
Yeah,
I'm
the
sure
audio.
Okay.
You know, we were
Tom, let's not be mean. Come on. 42.93 on the S&P. Just a little bit. 147.64.
I think it's a better tape than an hour ago, John. Seriously.
75.43.
It's a better tape.
Crude's higher, Lisa, by 2.7%.
Look at oil.
Yeah, and we're going to be looking at OPEC Plus. You're going to take it back on the rails. This question of OPEC Plus and the agreement potentially between Russia and Saudi Arabia. I think it's really interesting, this sort of toggle between not letting prices go too high because there is a concern about cannibalization in demand from the electric vehicle space, from the renewable energy source. That basically, if prices get too high, people will accelerate the shift away from fossil fuels, John. I mean, this is actually one of the main arguments against letting production fall too much and for prices to rise too much.
So what's the sweet spot?
That's a good question. I mean, it seems like it's about where we are right now, maybe a little bit lower, but this is the question, right? What is the sweet spot to keep this industry relevant?
Tom, what is the sweet spot on crude? Is that the debate we need to have?
Well, the behavior changed. The microeconomics change as you go higher and work higher. And what we're hearing from guys like Francisco Blanch is it's a demand dialogue. I mean, that's all there is to it. Demand's going to overwhelm any kind of supply delta that's out there.
The rally in energy equities has been overwhelming as well. We've had a move of more than 40% on the S&P 500, on the energy sector, plus 42.37%. That's energy. On the financials, the banks are up about 30% on the S&P 500.
I'm looking for an entry point.
Year to date, keep looking. And I think from an equity market perspective, for a market participant right now, I often ask people what they prefer, Lisa. You have to choose one, the banks or energy. And I'm confronted with the same answer continuously when it comes to energy. I'm not comfortable taking a bet on where commodities are going. I like the banks. But at the same time, you're taking a bet on where the Treasury market is going. And how comfortable are people making that call right now?
Not very comfortable. People are basically in a stasis, right? That's what we've seen time and time again. I thought it was interesting. DataTrek puts out these great notes and started to talk about what could go wrong, which of course I click on because I want to know what could potentially go wrong. And it says that the main issues that could potentially torpedo growth would be a Fed error, higher oil prices, which I thought was really interesting, or an earnings downturn. And that typically you have to get one or more of those to get some sort of disruption in the rally. We're looking at oil prices go up, but are they really going up quite enough to really be a trigger at this point? Not really, but at what point?
It's good to see you refreshing the material on the bearish outlook. That's nice. That's good to see.
Thanks, I appreciate that.
John,
Lisa, thank you.
Anytime.
Go on, Tom.
Nuno says we're going to make you proud.
Really?
Yeah.
I can't believe he turned down AFC Wimbledon.
Nuno's, there it is. We're going to make you proud.
Thank you, Tom. Is that what he says about the Tots?
Go Tots.
42.94, up a little more than 1/10%. From New York, good morning.
That's the delay expected to be added to the lifting of all lockdown restrictions in the UK. It had been due to happen on June 21st, but UK Prime Minister Boris Johnson to address the nation later today and to push that date into July. It's all down to a surge in the Delta variant, and government ministers thought to want more people to have their second COVID vaccine before they ease all restrictions. How are markets responding? Well, they're largely taking it in their stride. The FTSE 100 actually gaining ground. Strategists saying that delay largely priced in, that we could see further weakness for travel and leisure and hospitality stocks. The pound falling against the dollar, though Nomura saying this weakness likely to be temporary. In fact, money markets largely bullish on sterling, given the pace at which economic gloom has been lifting here in the UK. Indeed, last week's GDP figures pointed to an economy that is recovering quickly, and later this week we'll get unemployment, inflation and retail sales data that should all further illuminate the economic recovery.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Even if the economy slows, rates stay low, inflation's going to moderate, and we're still going to get positive long-term equity returns.
We think any pullbacks or any pauses in the market could be short-lived and shallow.
As this global recovery is unfolding, investors need to think more global in their portfolios as well.
The pressure will grow on the Fed to announce QE tapering. I think the debate at the Fed is shifting.
There's no doubt that to me that they're going to taper possibly by year-end. I'm not sure the markets are prepared for that.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television, July 1. It is the beginning of the second half of 2021. And John Farrow, we are in a great bull market.
We are, and we're slap bang on the median year-end forecast on the S&P 500 of 4,300, Tom. We've had some huge gains year to date, plus 14% on the S&P. And for some people, this is where it ends, Tom. This is basically where we'll finish the year. Not for everyone, though. Jonathan Goldberg, Credit Suisse, he's out there at 4,600, Tom.
Been there before. You got to believe, John, they're going to recalibrate after earnings, up or down. We will find out. Joyce Chang reaffirms 4,400 at J.P. Morgan this morning.
We're all bond market strategists, TK. You tell me where the 10-year yield is, and I might be able to tell you what sector to sit in.
Yeah, Ben Laidler really emphasized that point. Lisa Abramowitz, and that's really what it's about. Even the equity team follows bonds and the bond vigilantes.
Yeah, but the bonds, what do they follow? They follow data that is very inconclusive at this point. And how much are we going to learn going forward time in the next couple of months about inflation, about the path of the Fed? And that, I think, is probably the key to the turbulence that some people are forecasting.
John, we're going to have Ed Yardeni on. What a great morning. Liz Ann Saunders with us, and Ed Yardeni, I'll frame him in a moment. But John, do you notice that we hook up with Ed Yardeni by wires and the screen turns green?
Is that what happens?
It's amazing how Yardeni does that.
Up 8, up
he
2
moves. We got
1%
NASDAQ finally
on
green on the
S&P.
screen. Yardeni moves the market just by showing up and doing a sound check.
I'll whip through the price action right
Please
now.
do
Up
that.
0.2 on the S&P, on the NASDAQ 100 unchanged after a big move last month. We'll touch on that in a moment. Yields up a single basis point, Tom, 147.64, and we've got to keep going back to it. A nice lift in crude this morning, 7 and a 5, a 75.61 on WTI. The first time we've been able to say that since late 2018, up 3% on the day.
Major shout out to Chris Verone, really the first one I saw to frame $80 a barrel. Brent crude 76.39, up 2.4%. And of course, we've gone beyond that to some people framing out $100 a barrel. It was one of the toughest acts to follow in economics. Ed Hyman owned the high ground at C.J. Lawrence. This is a million years ago. And the guy that replaced him was the same, or frankly, some would say even better. Ed Yardeni out of Penn brought a huge, out of Yale, brought a huge acuity of linking economics to the markets at C.J. Lawrence and onto a storied career. He joins us this morning, as I mentioned earlier, moving the markets green by just showing up. What's the character of this bull market, Ed Yardeni?
Well, it's been very broad-based. Every now and then people freak out because it looks like it's very narrow. And we find along the way that the groups that tend to lead the market at some point start to lag, and the laggards catch up. I mean, we saw that earlier this year where the NASDAQ had a 10% correction and the overall market held up pretty well. We saw value beat growth starting September of last year. So we just have this constant rapid rotation going on in the market, and the market keeps moving higher to new record highs.
And then we saw a correction of the correction last month, Ed. We saw tech outperform, the banks underperform a little bit against the S&P. And then into the bond market, the yield curve, 2s10s was flatter by 23 basis points. Ed, this is your world. Let's go there, the bond market. What does it tell me anymore? What do 10s tell me?
I think that it's one of the reasons it's hard to get a significant correction in the stock market. I hope I didn't just jinx it by saying so, but there's $5 trillion at M2 more now than there was just before the pandemic. So there's a tremendous amount of liquidity. And with regards to the bond market, you know, whenever bond yields go up, I get a call from somebody in the press asking me, is that the bond vigilantes? Are they back? As you recall, I coined that phrase back in 1983, and during the 90s and 2000s, they were basically nowhere to be seen because inflation kept coming down. And suddenly they came back late last year, early this year, and now they seem to be taking a siesta again. Look, I think it's hard to talk about a bond market. Markets are free. This is not a free bond market. This is one where the Federal Reserve is clearly rigging the market on a daily basis with its purchases.
At 4:30 Eastern, Lisa will be busy looking at the central bank balance sheet over at the Federal Reserve. Where is it now, Lisa? 8 trillion, pushing 9?
8.1 trillion, yeah.
8.1 trillion. Ed Yardeni, how powerful is that balance sheet going to be through the whole of this cycle? $9 trillion.
Yes. Well, a trillion here, a trillion there adds up to some serious money. And we haven't even talked about the ECB and the BOJ, which have also been doing quantitative easing. So we've got a tremendous increase in the balance sheets of the central banks. Their fingerprints are all over the global economy and the financial markets. It's a huge amount of money, and they continue to accumulate these assets. I think, though, clearly we're heading towards an environment where they have to consider tapering. Let's cut back, folks. I mean, for example, housing. We've got a booming housing market, and so what are they still buying mortgage-backed securities? Where does that make any sense? And whenever they talk about their tapering, they say, well, it creates financial market stability. What that means is that they've been successful in pegging the bond yield and keeping it from going higher. If it wasn't for them, I think the bond yield will be at 2% today. I think it's going to go there by the end of the year because I think tapering is coming.
All right, so tapering, you think, even the beginning of paring back the $120 billion of purchases of securities, you think could send the 10-year yield to 2%?
Yes, I do. I think once the market starts to get a schedule from the Fed. I think the Fed will discuss it at the FOMC meeting in July, and I think in September they'll implement it. They have to. The economy is booming. Inflationary pressures have been pretty intense. Some of them are base effect. Some of them are maybe a little bit more permanent. So I think tapering is coming. And then the market's going to look at its schedule and say, well, you know, after tapering, once they're done tapering, which could be the first half of next year, they'll start raising interest rates. And that dot plot keeps drifting towards increasing interest rates in 2022 instead of 2023. So it's coming, and I think the bond market's going to be somewhat freer to express an opinion on the fact that the economy is strong and inflation is over 2%.
And I'm sympathetic to this idea that Treasury yields will rise when the Federal Reserve decides to buy fewer of those securities each month. Right. However, when they took a more hawkish tone, at least as reflected in the dots earlier this month, the long end went down. You actually saw yields drop, price higher. How do you understand that and extrapolate that forward as to the market response to potential tapering?
Well, again, I think it's really hard to psychoanalyze the bond market when the psychiatrist is. I don't know if I like this analogy that much, but you know what I'm saying. I mean, the Fed just keeps buying Treasury and mortgage-backed securities. And I think that's why we've been holding here around 1.5% on the bond market. But once they've already started to hint that they're going to taper. For example, they're not backing up the corporate bond market. They don't have to, so they're backing off on that. They increased rates in the very short end of the marketplace because you can't really have negative interest rates and not put the money market funds out of business. So I think they're already moving in the direction, and I think the bond markets will reflect that. Look, the yield curve is behaving actually pretty normally if you look at it over the past year or so. It's been ascending, steepening, and I think it continues to steepen. Usually it steepens to the point of 300 basis points. We're only halfway there.
Do you think that the stocks can continue rallying even as the Fed eases the pedal from its monthly bond purchases?
Yeah. I do, because as the Fed becomes less stimulative, there's still a tremendous amount of stimulus that's just kind of sitting there in liquid assets. Again, M2 is up over $5 trillion since the pandemic started, and that liquidity can. If you look at the M2 divided by GDP, you know that's the flip side of velocity, which is not my favorite variable. But if you look at M2 relative to GDP, we've got something like a year's worth of M2 relative to GDP. So there's a tremendous amount of liquidity that can go either to the economy or the financial markets or real estate or all of the above. All of the above is my choice.
Ed, did you ever think we'd be in a world where unemployment would have a 5 handle and a 10-year would be sub 150? Did you ever envision that kind of world?
Well, it's hard to imagine a world like that without the Fed being so interventionist in the bond market. There's various relationships like the copper-gold ratio and the bond yield, which have actually worked pretty well in the past. And that relationship says that the bond yield should be closer to 2.5% than to 1.5%. But the relationship hasn't worked because of all that intervention. I think these things don't stay out of kilter for very long. I think the divergences will converge, and I do see bond yields going higher.
Ed, that's the call. It's good to hear from you. Ed Yardeni there, Yardeni Research President. Tomorrow, unemployment, the median estimate, 5.6%. The previous month, 5.8. Your 10-year right now, Tom, sub 150.
And the revisions will be important. I mean, we're all trying to figure out trends here. Lisa showed the claims chart. We see that, John, in 20 minutes, make it 19 minutes. To me, that's the most elegant chart out there. I know it's removed from jobs, but I'm sorry, the claims is an inertial force to a better American, a more fully employed economy.
And Lisa, we're moving in the right direction.
Yeah, the claims are going to be highly political, though, and I want to point this out because people are digging through specific states that have ended the enhanced unemployment benefits and trying to see how much more their unemployment rate went down, how many fewer claims they actually filed. And I think that may be one of the biggest things that we can glean from this, whether it's actually accurate or not. I mean, it's messy data, but it's very political nonetheless.
It's not going to last long, that debate, though, is it?
No.
July, August, September, we're done.
Right, and this is just an idea of frictions, not necessarily a weighing in on the enhanced unemployment benefits themselves, that a lot of people say is what gave people the savings that can turbocharge the economy.
388,000, that is your estimate for claims. They come in about 18 minutes' time. From New York City this morning, Good morning. Tom Keane, Lisa Abramowitz, Jonathan Ferro, heard on radio, seen on TV for our audience worldwide. Your equity market, all-time highs, pushing 42.95 on the S&P 500. We're up by a little more than 0.1%. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. The Trump Organization's longtime CFO has surrendered to authorities in New York. Alan Weisselberg faces tax-related charges. So does the company itself. It's the most direct attack on Donald Trump and his company to emerge from a years-long criminal investigation by the Manhattan District Attorney. Saudi Arabia and Russia are said to have a tentative deal to gradually increase OPEC Plus oil output in the coming months. Negotiations over the details are still underway. The debate between OPEC and its allies has big implications for the global economy. Crude has risen about 50% this year. The recovery in demand has outpaced the revival of supplies after last year's deep cuts. And tomorrow's U.S. jobs report will show whether employers had greater success filling a record number of vacancies. The last 2 months of hiring have been seen as disappointing. According to a Bloomberg survey of economists, payrolls rose by 711,000 in June. Still, forecasts for the last 2 months were well above the actual figure. China's President Xi Jinping sounded a defiant tone today in a speech marking the 100th anniversary of the country's Communist Party. Xi called China's quest to gain control of Taiwan a historic mission, and he warned that the country's enemies will break against a, quote, steel Great Wall. And Robinhood reportedly plans to set aside as much as 35% of its shares in its IPO for individual investors. That's a bigger percentage than normal. Dow Jones says the stock trading app wants people to sign up to buy the shares on its new IPO platform. Retail investors are largely shut out of IPOs. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
is Jobs Day on Bloomberg Television. May's jobs report fell short.
I'm going to call it a modest disappointment 2 months in a row.
Will this month's hit the mark? The June Jobs Report, Friday morning on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The way that this shock has transmitted itself throughout the economy has been very unequal. Prices are rising, and if prices are rising faster than wages are rising, then those nominal wage increases don't actually translate into real buying power. The recovery has just been so much faster than many people thought it would be.
Andrew Hollenhorst there, the City Chief US economist from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 8:18 in New York. That means we're 12 minutes away from jobless claims in America. Your market, 42.94 on the S&P, up a little more than 0.1%. 5 days of gains coming into Thursday. 5 months of gains, 5 quarters of gains. In the FX market, euro dollar 118.80. In the bond market, yields are higher by a basis point. Tom, your 10 years 146.96, and just a final word on crude, 75.53, up by 2.8%.
Yeah, still climbing, 76.32 on Brent crude, up 2.3%. That's a nice move. We'll watch that closely here through the morning, including the open with John Farrow. Look for that in an hour time after the claims report, and then continue to look for John Farrow on the real yield this afternoon.
Thank you, Tom. It's tomorrow.
It's
tomorrow. Real yield's tomorrow.
It's tomorrow. Well, you can do the dress rehearsal today.
Thanks. I'll do that just for you.
Fine. Right now, Mr. Wesselman is going to do a dress rehearsal, except it's real. There's something about the clarity of Center Street in Lower Manhattan. And if you were ever so lucky, you go into AR1, which has better air conditioning than AR2, AR3, AR3A, or AR4. Those are the arraignment rooms at Center Street. Tina Davis is here to give us color here, our legal executive editor this morning. I want to forget about all the Trumpian stuff like that. What's the emotion when you go in there? Does he go in with handcuffs on into the cold Center Street rooms?
Well, it sounds like you've been arraigned yourself once or twice, Tom. No, what happened this morning was...
This is her last appearance. How'd you know that? You read in on this very well.
You know, often indicted, never charged.
Thank you.
Look, he came in today, he surrendered to authorities. So there was no handcuffing of him at home. As you know, prosecutors like to wake you up early in the morning with a knock on the door and some handcuffs. That did not happen in this case, as is more common in white-collar crime. There was an arrangement with his attorney. He actually came in to 1 Hogan Place, which is where the Manhattan District Attorney's office is, actually through a freight entrance.
Okay,
so there's a phalanx of photographers and cameras set up outside of this building, and almost everyone missed him.
You were grizzled at this. What's the emotion that changes when, as one legal expert said, your name's in the caption, or your name's on the little door outside in front, or you're in the side room with your lawyers going, okay, we're here. What changes for him today emotionally?
Look, it's the state of New York versus Alan Weisselberg. I mean, there's a separate case with Trump, as you pointed out, but this is very personal now, and he will be able to see the full indictment against him, which gets unsealed later this afternoon. He'll be able to see the number of charges. So, I mean, what we're still waiting to see is exactly what he's going to be charged with. We have some sourcing that indicates it has to do with some of the fringe benefits he received that weren't properly taxed or paid for from the company. But look, we're talking about what's potentially a multi-count indictment, and then he'll be able to get a sense of what the potential penalty is in terms of prison time.
Tina, the mood is that Alan Weisselberg is not the main target. It's former President Trump, and that this is a way to get to former President Trump. Is that what you're hearing from your legal sources?
I mean, absolutely. This guy worked for the Trump Organization for 4 decades. More than half of his life has been spent working for the Trump family. And he's the CFO, and as we've seen from other places, he's been described as someone who knows where every penny goes in and out of that building. So yes, if you're bringing an indictment against him, I think it's also interesting they're bringing an indictment against the company itself. But if you're bringing an indictment against him, you're hoping that this will pressure him to start cooperating with the prosecution.
Tina, former President Trump has said this is politically motivated, that it is a hit job. How political is the DA's office that is prosecuting this case? Can you just sort of paint a picture of the objectivity or subjectivity at stake here?
Well, one thing I would point out, Cyrus Vance, who is the Manhattan District Attorney, is a Democrat, as you would expect for any citywide office in New York. But he's also not run for re-election this year. So this is the end of his term. In terms of what this means for him politically, there is no kind of next job, or he's not doing this to seek favor with New York City electors. We've certainly seen the people who are vying to replace him, make statements to the extent that they would continue this prosecution and continue to go after Donald Trump. But look, I mean, this is a Democratic city. This is a city that has long been hostile to Donald Trump and his policies. So you can't discount, that sort of emotional arena that we're in.
Tina, can you give some sort of sense of the scale of the situation that Alan Weisselberg is in terms of the potential penalty, in terms of time served, in terms of what actually, how severe what he is allegedly supposed to have committed actually is?
I would love to do that, but the problem is we haven't seen the indictment yet. And so until we have a sense clearly of what the charges are going to be and how many charges he's facing, we really can't speculate on what time is involved. Again, what we're hearing from sources is that this involves fringe benefits. That doesn't seem like something that would normally be, the kind of thing that you would throw someone away in prison for a very long time for. But it depends on how long it's been going on, if there are other charges that we're not aware of.
What's the distinction here between 100 Center Street and guessing 500 Pearl Street? The New York versus federal court process here for the Trump organization?
Well, I mean, there's a few differences just in the way things are carried out. In New York, there's a specific law having to do with corporations that they can be subject to something called enterprise corruption, which is sort of the state version of a RICO law. But again, it uses, you have different sort of parameters and basic sort of levels that you need to hit to be to qualify for that. So there are different laws in play here. And it's all very based around New York specific law, which, as you know, is very interested in corporate malfeasance.
Just the perfect guest this morning, Tina Davis of Bloomberg. Tina, thank you. Thank you so much. We need to reset for claims in about 6 minutes' time. Jobless claims in America, 388 is the estimate. That would be a move lower, Tom, from the previous week of 411.
Yeah, it's a trend there. As I've said many times, it is the most elegant chart out there. This has a persistence to good news, John, but I do take the point of the experts like Mike McKee. Claims is not jobs tomorrow. They're really two separate entities.
Immediately pushing forward to payrolls Friday, Lisa. Your estimate there, 711.
Yeah, the idea here is how much momentum can we get behind just the pace of hires and, frankly, the pace of people who are entering the unemployed ranks. Continuing claims is what I'm keeping my eye on as well. It's expected to be 3.34 million people still receiving ongoing claims, going down, but at a very slow pace, John. Why are there so many people on unemployment rolls if there are so many job openings out there?
Who knows? And to go with the who knows, this is the perfect supplement. There is a 650K spread between the high and the low estimate for payrolls going into tomorrow. Tom, is still wide.
It's what, there's a heated debate out there, John. What I noticed, and I can't cite it, I'm so sorry, but it's amazing how New York and California have the delta in the restaurant hospitality area. There's some real regional differences and almost state-by-state differences.
This has just been tremendously difficult to read, Lisa, over the last several months. And going deeper into summer, we still haven't resolved some of these big issues.
And we really haven't resolved the issues of childcare. And I don't mean to harp on that from personal experience, but if people's kids are not in school or away at summer programs, it's tough.
You're right to harp on that, and that's why people keep mentioning September as a month to really focus on for this labour market. From New York City this morning, good morning. Lisa Bramage, Tom Keene, Jonathan Ferro. Equity futures, 42.95. The jobless claims report is next. From New York on TV and radio, this is Bloomberg.
was a bit of a historic day. It was the first time Indigenous designers showcased at Australian Fashion Week, and it was a full house of all Indigenous talent.
It made me so proud. Absolutely beautifully done. I mean, the designers, the pieces on there. I think just about every model or every second model was like, oh, I want that, I want that. So each of my pieces, we have our signature prints, which are each tell a story and is definitely a contemporary way of experiencing Aboriginal culture. And then each of my pieces are named after, inspiring Aboriginal and Torres Strait Islander women. So when the customer buys something, they're learning about the story, they're learning about women. I would hope that it isn't tokenistic, and I would hope that it's not done to tick a box. And so, those things have to be, you have to be mindful about that. But I think it's incredible what's been achieved so far, but, there's always room for growth. I think the elevation of Aboriginal and Torres Strait Islander people in these spaces, it's long overdue, and it's a really powerful and incredible time, I think, and to be a part of that is really special.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Live from New York City on radio and TV alongside Tom Keene, Lisa Bravitz, I'm Jonathan Ferro. Your equity market looks like this going into the data here in America. Equity futures up 5, advancing 0.1% on the S&P, 42.93. In the bond market, yields basically unchanged at 146.96. With your data, here's Mike McKee.
Well, John, for once we get a downward surprise, better than expected jobless claims numbers. They come in at 364,000. That is a decrease of 51,000 from the previous week's revised level of 415,000, and it is much lower than the 388,000 that was forecast. What we also are looking at, obviously, is continuing claims, because we want to know how soon people are coming off these rolls. 3,469,000. That's higher. But, of course, that number is delayed by a week. So it is not as good a news on an ongoing basis, but we do see some progress being made.
Just want to turn to the price action briefly. Mike, S&P 500 futures up 4, advancing about 0.1%, basically where we were. Looking at the bond market at the moment, yields pretty much where we were too, 147 on a 10-year, almost 2.1% on 30s. Mike, you teed it up nicely going into payrolls. Is there any read on this from claims over the last couple of weeks going into payrolls tomorrow?
Well, there's not a lot, because these are people who are not working, who are getting claims, or who are no longer getting claims and could be working, but it doesn't tell us necessarily that they did get jobs. And that's the big dichotomy between the JOLTS numbers of those who are looking for work and those who are offering work. So we'll have to wait until tomorrow to see what progress has been made.
I went to a fancy chart, Mike. We're not going to show it. Log convexity here of an elegant chart, which really reaffirms ever more elegant this morning. I mean, we're heading towards a fully employed America. You've got an important GOP map up the Mississippi and even out beyond the Missouri River as well of the states here that have said we're not going to play with Washington's game.
Yeah, one of the big issues is have people not been going back to work because they can get unemployment benefits. And so a number of states cutting them off early. And we can look through the list here and see that in terms of initial claims, Alaska, one of the first to cut it off, down by 17,000. Iowa goes up by 189,000. So maybe it doesn't hold through there. But Mississippi and Missouri both cut off a couple of weeks ago, and Mississippi's down by 302,000 and Missouri down by 247,000. Yeah, that's a lot as a percentage. I don't have the exact percentage calculated, but it does tell you that we're seeing a big drop in initial claims. And then when you look at the total claims for those states, Alaska is down by 753,000, and Iowa is down by 2,003,000. So we're seeing a lot of drops. Actually, not 1,000, I'm sorry. Alaska's down by 753. But we're looking at significant drops in the states that did cut off benefits. That just tells you that they cut off benefits and threw those people back out onto the street. Did those people then get incented to go get jobs? That's what we don't know yet.
Mike, one thing that you're pointing to also is the dispersion in the recoveries in the different states, how different different states are with respect to how high the unemployment rates are or how low. What are you seeing in terms of the tale of two sides of the United States?
Well, it doesn't appear that there is a significant difference geographically in terms of the number of people who've lost jobs recently. We are looking at, California, which is still paying generous benefits, sees 6,000, almost 7,000 jobless claims fewer than the week before. But that doesn't tell us that those people are going out and getting jobs. And that's going to be the hard thing to parse out. We don't get the data on state-by-state employment until later in the month.
You with us tomorrow?
I wouldn't miss it.
Very well. The Red Sox are in first place. I thought, best
the Red
record
Sox,
in the American.
and they've increased their lead. So you
good. I thought maybe you were taking another Red Sox game, as I don't. He somehow goes to Red Sox games and.
Solid banter, gents. This is good.
It's important. Red Sox.
It's good to have Mike with us tomorrow.
First in the American League.
Thank you, Tom.
Constance Hunter is going, what are they talking about? She's with KPMG, their chief economist, and joins us this morning.
I'm a Yankees fan.
Well, you're a Yankees fan. Well, please. What Doug Cass send you in? Constance, I mean, we can't talk Yankees, Red Sox right now, but we can't talk claims to jobs. Does this claims number adjust your jobs outlook tomorrow?
Not really. And I just want to say with regard to the state map that you put up, what we have in our latest chart book is that same map overlaid with the vaccination rates, because we think that this is a big thing that is keeping people on those continuing claims. So when thinking about the impact of the cutoff of pandemic unemployment insurance supplemental dollars in certain states, we need to look at the continuing claims, and we need to look at what's going on with vaccination rates in those states, because we still have over 40% of working age adults have not received even one vaccine. And we think this, combined with childcare, are the things that are really holding back people going back to the labor force.
Is this why people keep bringing up September, Constance, the date in the diary on the calendar for this year, that some of these issues might get resolved or begin to resolve them?
Yeah, sure. If we go back to 100% in-person school, and we are working on vaccinating young people, so that those odds keep going up if we keep getting those vaccines distributed. But I should point out, for if you have young children that aren't yet in school, we have 8.5 fewer daycare workers than prior to the pandemic. So daycare, if you have young children, is very, very difficult to find as well. So it solves the problem for everybody who has school-age children. It doesn't solve the problem for very young children.
Constance, let's extrapolate out and build on this, and particularly with respect to this argument over whether to end the enhanced unemployment benefits earlier rather than later. Are there any detrimental effects from ending them now based on what you're saying?
Well, if you believe that the supplemental unemployment insurance has limited economic scarring, and data certainly suggests that it has, right? So we see personal bankruptcies are down, delinquency rates are down, we see savings up. So we know that household balance sheets have benefited from the supplemental unemployment insurance, and that should limit economic scarring. So as we enter the recovery phase, people will be in a better position to consume, and that, of course, will help the recovery. I do think we're far enough along that a lot of that scarring should continue to get vaccinated as we get children back in school in the fall, all these sorts of things. There's good momentum. But what we really don't know is how much of this is related to vaccination rates. And we can look internationally. Interestingly, you see the same phenomenon globally, especially in developed economies that you see here. Leisure and hospitality workers really reconsidering, is this a field I want to be in? Are there other options that I could be doing? If we go back in history and look at previous pandemics back 500 years, we observe something really interesting when we compare wars and pandemics, right? Because both have loss of life. But in pandemics, there is an increase in real wages after the pandemic. And it seems like there is some hesitancy to go back to in-person work after pandemics. And you see it in the JOLTS data as well. You see all this churn. People reevaluate, what is it that I want to be doing with my life?
Okay, Constance, we got wages up. I mean, Morgan Stanley really emphasizes that. They call it wage gain potential. I get it. I also have inflation up. Right now, I've got a massive negative real wage growth. Do I get to a positive inflation-adjusted wage growth?
I think by this time next year, you absolutely do. But we're looking for a 2.3% inflation this time next year. So we're expecting to dissipate, but we're still expecting pretty healthy inflation. With that said, we're also looking for a growth rate that's close to 5%. So when you combine these two things together, I think that we will see real wage growth. And the question is, which segment of the labor market? So right now, we're seeing the wage growth in the segment of the labor market that has to work from their job site. And that unemployment rate is about 6.5%. But the increased demand for wages, the reservation wage, the wage at which people are willing to work, has gone up for people without a bachelor's degree. So that's a lot of the people that have to work at their job site. For those people who can work from home, the unemployment rate is 2.7%. And if you imagine that this is going to be a recovery that's 5 years, I would see, if you look a year or two out, it's that 40% of people with bachelor's degrees that can work from home that are already in a tight labor market, where you're going to see the bulk of the wage inflation throughout this cycle.
That's a really interesting final point. Constance, thank you. Constance Hunter there.
Should we do the show
KPMG
from home?
Chief economist. I think we did that, Tom, for about 4 months.
It worked out.
How did that work out for you?
It did not work out well, folks.
That did not work out for me.
Let's recapitulate that at mid-year here. Thanks to our technical team who jumped through massive hoops to get that done and to get us back.
You know,
that was a tough time. Go on, Lisa.
Can I just say, I want to offer thanks to my two boys who sat on the couch eating breakfast while I was broadcasting, just to give you a sense of the childcare and the working from home
John,
situation.
Can I also say I'd like to thank Vet Bill and Kennel?
Of course, yeah. I mean, what are these Oscar speeches? Is that what this has
John,
become?
who would you like to thank here?
I would like to thank my mum. I'd like to thank my family. No,
The bartender
Equity Futures,
at the bottom of the building?
42.94. I mean, yeah, he needs a thanks, Tom. We haven't seen him for a while. We'll go back there soon.
We should.
Up 6 on the S&P, up a little more than 1/10%. In case you don't know and you're not familiar with this show, this board here with the markets, that is my crutch. 146.29. Yields unchanged on 10s. Lisa, 75.33. 75 handle on crude.
I don't think you had to say that. I think that everybody
knows.
You were just go to markets when things get pretty awkward.
What do you think of that September issue? Keeps coming up, doesn't it?
Yeah, well, I think that it's a real one, especially for people who have kids. Look, I think that it's very difficult, especially when they're not doing anything. They're just sitting at home, Roblox.
Are they still just sitting at home?
Well, mine are actually.
Are they trading yet?
Yeah.
Did you give? This is the most for our audience
down.
worldwide. This is the most important question of the day. The Abramowitz boys wanted a pool of money so they could start trading. Did the Abramowitz boys get that for this summer?
No. Hold on a second. Mr. Farrow was lobbying Ms. Abramowitz
I think it's
to
important.
get their boys. You know, I haven't gotten it for them yet, but at some point, perhaps little Abramowitz will be on Robinhood.
Are you going to?
I'm a little nervous.
Why?
full into Dogecoin because that's what they understand?
Let them understand the lesson of losing money.
Yeah, with my money.
Yeah, just a little bit. You can set the extremes of whatever they lose. That's up to you. That's a personal decision.
We can take this offline.
John, Anne Marie emails in.
What did she say?
She says Yankees.
Is that what she said?
That's what she said.
In an
Value
email.
add.
This whole show's been value add this morning. Laura Kane of UBS is going to join us on Bloomberg TV in the next hour. Looking forward to that. She is bullish the equity market and she still likes the cyclicals from New York City.
Cubs fan.
For our audience worldwide on TV and
Chicago,
radio.
John.
This was special. Thanks, Tom. Where's Chicago? Come on. Why do we always do this? Why do we do this? Why are we still doing this? I understand where things are in America. This is Bloomberg.
Mic's still on.
With the First Word News, I'm Ritika Gupta. For the first time, a multi-year investigation of Donald Trump's company has resulted in criminal charges. This morning in New York, the Trump Organization's longtime CFO, Alan Weisselberg, surrendered to authorities. He and the company face tax-related charges. Neither the former president nor his sons are expected to be charged. And a federal judge has blocked Florida's new law penalizing social media companies for barring political candidates. The law was to take effect today. It was signed last month by Republican Governor Ron DeSantis. The judge ruled that the law violates the First Amendment and doesn't apply to all social media providers equally. Nissan and battery maker Envision will build a $1.4 billion hub for making electric vehicles in the UK. The Japanese automaker will produce a new all-electric crossover vehicle at its Sunderland factory in the north of England. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Yet in dangerous levels in terms of wage growth. The U.S. economy can absorb higher wage growth without really creating higher inflation. What I'm really going to be looking at is inflation expectations, especially from the business side, actually, because they are the one setting prices. And you see actually a creep up in those inflation expectations.
Thomas Custard there with Pictet there with some real optimism on the American economy. We have important interviews with Liz Ann Saunders, Ed Yardeni, and many others as well. Lisa Abramowitz with the Tom Keene as John Farrell waltzes off to the 9 a.m. hour, an important hour, particularly given what we see downtown. Is the chief financial officer of Trump Organization is scheduled for some form of arraignment proceedings. We'll see how that goes through this morning. Right now, not downtown, but in Midtown was a reaffirmation of all that Dana Telsey believes in. Dana Telsey is definitive in fashion in the study, the security analysis of what we buy and wear every day. And Dana, it was Marc Jacobs at the public library, and as Vanessa said in the New York Times, there were hugs and kisses. What is the symbolism of New York's finest, Mr. Jacobs, doing a show here in the heat of New York City summer?
I think it's about the reopening and the recovery that's just beginning. The fact that vaccinations have been given, that there's more to go, that there's a safe way for people to socialize and gather. It's been over a year, and I think everyone's missed it. And that's why what you, Tom, and I have talked is it's a time period of supercharged change.
What's so important here, Dana, is Anne-Marie Horton down in Washington for Bloomberg News was killing it this morning, wearing Marc Jacobs in pink. Lady Gaga says pink is this summer's color. Are we going to refill our closets with pink?
I think we are refilling our closets. We're refilling with fashion. Basically, everyone wants optimism. What does optimism show? That you can go out and people can be together again. So I think these trends, I think they're going to continue. I think consumers have money in their pocket, and we're going to have a super holiday season if companies can only get the inventory. And keep in mind, we're seeing so much change out there. We're seeing companies overall look for ways to better serve the consumer in all different areas.
Tom, where do you find out style trends?
Where do I find them out? Yeah. I read Dana Telsey and Joe Feldman at Telsey Advisory Group.
I don't see any pink discussion in her note. Dana.
Come on, Lady Gaga's all over this. Leave the lovely Gaga alone. She says
right.
It's pink, it's pink.
All right, moving forward, Dana, aside from the pink call, you talked about how consumers are dealing with their orders in a different way, the online world and how that has affected brick and mortar. What are you expecting, particularly in the second half of the year, in terms of the distribution between e-commerce and brick and mortar as more people get vaccinated?
So what we're seeing is even as stores are reopening, online sales remain solid. And I think, if anything, the supercharged change that's gone on, I think the COVID crisis created innovation, leading to the acceleration of so many things that would have taken 3 to 5 years to achieve. So what you're seeing out there is an accelerator of new business model capabilities. I think stores recover. They may not get the same traffic because you have purposeful purchasing. But what you are getting is you're getting more customization. Consumers are going in there and converting. And you know what we're seeing? We're seeing every category being disrupted by change. And there's like a sea change every 10 years. So what used to be the category killers of the 1980s and 1990s are now the disruptors. You think about it, and so many of these companies are still private, whether it be Warby Parker in specialty retail, Forward in healthcare, Birdies or Rothy's in footwear, Glossier in cosmetics, Holly in the auto performance aftermarket.
Yeah.
Private companies with a lot of runway in the DTC market.
Dana, how much pricing power do these consumer-facing companies have, given the fact that we're seeing input costs rise to the degree they are?
I think inventory levels are lean, supply chains are disrupted. We're seeing better merchandise margins than we've seen in years. And I think that we're going to continue to see solid margins going forward. Are we going to get back to promotions? I think we will. But the extension of what these delays are, I'm hearing you won't get normalized inventories until nearly the end of the year and into 2022.
Dana, where's value in luxury right now? If somebody wants to buy the usual names, LVMH, Gucci, Keurig, the rest of them as well, is there any value there? Or are they just priced to perfection?
I think there's still more value there. I don't think you can look at the history before 2019. I think we have to go forward. And I think the engagement of consumers with luxury, you have the Chinese that are staying in China. When tourism comes back, it's going to accelerate the rest of the world, and you have locals buying here in the U.S. Keep in mind, Tom, look how Chanel raised their prices. We're hearing a price increase in the space.
Yeah, Dana, thanks for bringing up a sore point. Joe Feldman crushes it on Amazon as well. Link your world into Joe Feldman's world. Is Amazon out front on fashion, or is Bezos going down in flames?
I think Amazon is out there in so many categories. I think they can be for essentials, and you're seeing other types of companies be very singular in nature in terms of what they're able to do with categories. That's why I say category killers, DTC companies like the ones I mentioned, are going to be able to resonate against Amazon. You're seeing vintage in all different categories be very relevant.
Dana, thanks so much. Go away. Chanel is overpriced. That's what I learned. Dana Telsey, thank you so much. Telsey Advisory Group as well. Lisa, I'm sorry. I just think, Gabrielle Chanel and a fashion manifesto, I could see you manifesting Chanel this fall.
We've discussed fashion many a time, Tom, and you will be my sartorial guide going forward. What, you think a bow tie would work?
No, I don't think a bow tie. I just think, I think, we got to talk to, the higher ups here about, a full Chanel look.
All right, let's reset in the jobs market. I want to just say, we've been digging into the data, and I want to just sort of underscore something Michael McKee was talking about, the idea here of how people are looking in the state-by-state data to see which states saw the biggest declines in the unemployment filings and which saw increases. I think it's really interesting that Indiana reported an increase because that was one of the states that ended the pandemic unemployment assistance early for self-employed workers. So this idea here that there is not necessarily a correlation, how idiosyncratic is that? And just to give you a sense, initial claims in Pennsylvania, Kentucky, and California posted the largest declines. Massachusetts and Indiana reported increases.
Well, that's the granularity of it. There's also the big picture as well. And if you say whether it's Ed Denny, 7.6 million jobs need to be filled, or maybe it's Economic Policy Institute saying 10, 11, 12 billion need to be filled, it's just time out at least. It's a month-by-month thing. We're focused on tomorrow. But maybe it's 6 job reports in a row?
Well, the idea here is if you can't bring people in to staff your store, that constrains your potential growth at a time when suddenly people are roaring back in, right? I mean, well, raise the wage, yes. At the same time, smaller businesses in particular are complaining that they can't make money then.
Raise the wage. I don't know what else to say. It's been like a decade, 20 years. Raise the wage. Was that really scientific, Lisa? Nailed it.
Yep, CFA level.
Green on the screen. Futures up 4, Dow futures up 58. NASDAQ goes the other way a little bit. Stay with us on radio and television. Good morning.
G7 today need to wake up and listen to the science. There isn't room for discussion on this. Scientific inevitability, and they need to act. They don't need to talk anymore. They need to just act.
Climate change has been on the agenda of the G7 since maybe 2003. So we need to see action, not just talk. And we've only got 9 years left to halve carbon emissions if we're going to stop dangerous climate change happening.
United, we'll never be defeated! The world is possible!
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Live from New York City for our audience worldwide. Good morning, good morning. 5 days of gains, 5 months of gains, 5 quarters of gains going into the second half of 21. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
From New York, we begin with the big issue, kicking off Q3.
As we move into the second half of the year, data sensitivity is going up.
Economists are really trying to parse the data.
Trying to gauge that this is a peak data, peak inflation. This will be more about real rates. Real rates are moving up for good reasons because economic growth.
Accelerating economic momentum.
It's a difference for how you invest in U.S. equities. Does the Fed become more hawkish?
You have to look at the jobs market.
There's a labor shortage.
If we get strong payrolls, that does eventually lead to Fed tapering.
And ultimately, whether it's a 2022-23 hike.
It's very important that we need to see a lot of the job openings be filled.
The most likely scenario is that we do continue to have momentum in the economy.
Blind optimism.
Joining us now is Morgan Stanley's Matt Hornback and Colin Martin at Charles Schwab. Matt, let's start with you, sir. Looking out to Q3, what are you and the team looking for?
John, thanks for having me on again. Look, we're looking for a robust recovery in the U.S. economy. We think that the data is going to continue to come out strong. And we think that the Fed will ultimately react to that. We have to remember what Chairman Powell said at the April press conference, that the Fed is going to be extraordinarily dependent on the realized data. And that's what we expect. We expect good data. We expect the Fed to continue to move down this path of policy, setting up policy normalization. And so that's what we're expecting.
Matt, 2 points there. Data will be good. The Fed will react. Colin Martin, do you agree on both of those points?
We do agree. I think the big question is how soon will they react? If we go back to a comment that Powell made a few months ago in terms of what the timing might be, he used the phrase a string of data, right? I mean, how many consecutive months of good data, especially on the jobs market, will we see? And we've seen a little bit of a slowdown there, but we think that's just a temporary pause. In the long run, we think the data will continue to improve. So we're in agreement there. On the jobs front, we think we'll start to see more improvement come fall as children are back in school, that allows people to go back to work. They don't have to worry about daycare or childcare as much, and it actually brings a lot more people to the school system, you know, full-time workers that haven't been back yet. So we do think the trend's in the right direction. We might have hit a little bit of a pause here, but the outlook still remains strong.
Well, you both agree then. The data will be strong, the Fed will respond. Let's talk about how market participants will respond, because I keep hearing this, and I've just heard it from you, Colin, that September, the fall, that's what you've got to wait for to get a clean read on the data. What do you do between now and then? Do you just ignore it?
Well, it could be a summer lull for now, but we do think as we get closer, you know, as the year progresses, we do think yields are going to rise. While it's been a rough first half of the year for Treasury investors, returns are generally down. It was a strong quarter because we saw yields fall. We think we can be range bound for a little bit as we continue to digest the data, but at the end of the day, we expect yields to rise. I mean, going back to the point about the strong growth outlook, it is robust. And if you look at where real yields are right now, you know, almost negative 1% for a real 10-year yield, that just seems too low to us in an environment where growth is probably going to be double digits in the second quarter and still strong through year end. So we think the trend is still higher in yields, but it might be range bound for a little bit.
The same question to you, Matt. How much information is in the economic data in America right now?
Well, John, I think that there's a lot of information in the economic data set. And again, if the labor market improves as we think it will, then we're expecting the Fed to, in September, provide the very clear forward guidance that Chairman Powell has been talking about in almost every press conference this year, that eventually we will get that clear forward guidance. That's what we're expecting to occur in September, John. And that, in addition to continued progress on the negotiations in Washington, D.C., relating to infrastructure, we think is also another factor investors will have to start paying attention to again. We've had a bit of a lull, I think, in the conversations we've had with investors around infrastructure, because quite frankly, the news flow has been confusing. And I think some people are looking at this bipartisan package and suggesting that maybe this package means that the larger, sort of unitarian package won't go through is just something that we don't believe. You know, we think that ultimately, at the end of the day, the Biden administration will get both a bipartisan package through as well as a reconciliation package through. And that's one factor we think will be moving markets in the second half of the year.
A couple of points there, Matt. We'll turn down to D.C. and catch up with Anne-Marie, our Washington correspondent, in about 10 minutes. We need to talk about the incoming data that comes in about 23 hours' time. Jobless claims came in just beneath estimates, the lows for the pandemic. That's what you want to see. Going into payrolls tomorrow, your estimate is 711. Let's bring in Mike McKee for more. Morning, Mike.
Good morning, John. Well, 366,000 jobless claims is definitely an improvement. It doesn't tell us anything about what we're going to get tomorrow, however, and there is a lot of confusion about that. There's the big question. Where are the workers? That's the number of job openings in white and the number of people who got hired in blue, and there is a big mismatch there. The Fed, and you guys are talking about that, is going to be looking for, as Jay Powell has said, substantial further progress. Does this qualify? Before the pandemic, unemployment was at 3.5%. Average hourly earnings were up 3%. Now we're getting closer to those numbers. I'll argue the participation rate is the one that people are really going to look at. It was at 63.4% in February of 2020, now just 61.6%. That's the number of people who are out there either in jobs or looking for jobs. And the number of people who have to look for jobs to answer that question about where are the workers is going to have to increase. And that's probably what the Fed is going to be looking for tomorrow. You mentioned 711,000 is the consensus forecast. You got to say we're probably just guessing there, because the last couple of months we have only seen the economy create jobs that are fewer than the consensus forecast and fewer than the ADP numbers. So at this point we are still looking for whatever we can get, basically. But you look at those two lines there above the actual results and wonder if we're going to even get 711.
Mike, it speaks to how wide the guesses are right now. The low-end estimate's 400K. The high end's a little more than 1 million. We're still trying to work this out.
Yeah, at this point, there's no model. There's no way to know how fast people are going to come back. States opening at different rates. A lot of questions about why people don't come back, questions about vaccinations. So it's pretty hard to know where we're going to come out.
Mike, thank you. This is not straightforward. You've got the economic data, which is tremendously difficult to get a read on. That's why you've got these massive ranges when it comes to estimates. Every single payroll's Friday. And then you've got the Federal Reserve that tells you they want to see substantial further progress towards their goals. And the problem is that they can't constitute what substantial further progress actually is. They can't agree on what constitutes that. They all have a different opinion on it, including the Dallas Fed president who caught up with Mike McKee. Take a listen to what President Kaplan had to say.
I think it'll be far healthier to start soon and sooner rather than later. Why? Excess risk-taking, excesses in the housing market, and excesses and imbalances in the overall economy. And I do believe if we take our foot off the accelerator gently now, we'll have more flexibility down the road to avoid more abrupt action or severe actions in the future.
Let's turn back to Matt Hornback and Colin Martin. Matt Hornback, President Kaplan is not a lonely man. He's got company. How important is that?
Well, I think the sort of cacophony of voices you hear on the Fed these days is just a sign of the times. They are starting to pivot to an outlook that is better for the economy. That means that ultimately the extraordinary amount of accommodation the Fed's providing on a monthly basis will soon start to draw down. I think this makes perfect sense. We see this in every transition. There are certain voices on the Fed that have, a more hawkish view of things. There are certain voices that have a more dovish view. And as you start hearing more of that disparate voice on the Fed pipe up, ultimately that's just signaling that we are moving into a different environment.
Well, I'm trying to work out then what it means for markets. We had Bill Dudley, the former New York Fed president, out on the Bloomberg terminal this morning, available on Bloomberg.com as well. In an opinion column, he says the Federal Reserve will taper, don't freak out. And one of the reasons he points out is that the Fed now has a plan. They have experience of doing this from 2013. Point one, you talk about tapering. Point two, you actually taper. Three, you raise short-term interest rates. And four, you allow the gradual runoff of securities from the balance sheet. Colin Martin, the issue at play here is, okay, they have a plan, but as I said earlier this morning, the market understands that plan, and once they initiate phase one, the market jumps to phase 2, 3, and pretty quickly phase 4 down the road as well. How do they avoid that, Colin?
I think with all the talking about tapering is how you avoid it, and I'd say so far they've done that. We learned in 2013 that a simple phrase here or there can send the market into a tailspin, and we haven't seen that just yet because of the communication. Kaplan was one of the first people to come out and talk about tapering, and he was kind of the lone dissenter on that front for a while, but now he has more people that are on his side. So we're clearly talking about tapering. The announcement should come soon, but we don't think it should have too much of an impact on the market, especially in terms of higher yield, because that's not what we saw in past iterations of this. In QE1 and QE2, yields rose during the bond buying programs, and then when they ceased buying, yields fell because that pulls down growth and inflation expectations. We saw that also during QE3 when they announced the tapering and then began to taper. So we think that can happen again. So we don't think once the announcement hits, that's not why yields can rise. There's plenty of reasons why we think yields should rise as the year progresses, but Fed tapering isn't one of them.
So let's pick up on that, and I think it's important. Last month, with all of this going on, 10-year yields were lower. 2s, 10s were flatter by 23 basis points. Now, for the curve to move by 23 basis points flatter on a monthly basis, that's a chunky move. Matt Hornback, it raises the question, and I've got an answer from Colin. Do you think tapering is bearish for treasuries or bullish?
Well, John, our view of how the Treasury market responds to things like this is it moves based on where things come in relative to expectations. And right now, most investors expect tapering to begin in the first quarter of next year and last for about the entirety of 2022, where I think tapering could put upward pressure on yields, John, is if it occurs over a shorter time frame or occurs later this year as opposed to early next year. Again, markets move relative to how things come in to previous expectations. And so if the Fed decides to taper its bond purchases over, let's say, 6 months as opposed to 12, because the economic data come in particularly strong, the bond market's going to sell off on that, John. There's no doubt in my mind.
Matt Hornback, Morgan Stanley, Colin Martin of Schwab, sticking with me. Equity futures positive 0.1%, 42.93 on the S&P. Let's get you some movers. Here's Abby.
John, let's start out with a couple earnings movers because we do have the shares of Micron falling today. Despite putting up a really great quarter, they beat estimates. They also offered a fourth quarter adjusted earnings profit outlook that was stronger than what had been forecasted. Analysts really like the quarter, saying more upside ahead, DRAM strength. Yet we have the stock lower. Maybe a case of too far, too fast, although it has been stagnating over the last couple of months. We'll be digging into this. Now, Walgreens, this is interesting. Earlier, after results came out, it had been popping higher. Now it's lower. Another big beat there. Their adjusted margins were better. The U.S. vaccine rollout really boosting their revenues. They've raised guidance. We'll be digging into what's dragging on those shares as well. Where we have strength, of course, the energy complex, oil above $75 per barrel for the first time since the fall of 2018. That's helping out all of your big oil names. And that is, of course, a reflationary play. We have reflation in the banking complex as well. It's interesting because yields are basically flat, stagnating after falling yesterday, but nonetheless, you have the big banks higher. Maybe this is a more play on the payouts being boosted after passing the Fed stress test last week. John.
Those two sectors this year absolutely flying. More from that. On that from Abby through the show. Coming up, President Biden piling on the pressure on Republicans, highlighting poor infrastructure conditions across the country. Their conversations next from New York, 17 minutes away from the cash open. As we kick off Q3 in the second half of 2021, 42.93 on the S&P. This is Bloomberg.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Our caucus is very, very pleased with the bipartisan agreement. There are many good features to it, but not in terms of numbers, but not policy. In the House of Representatives, that particular version, as it is something that we would take up once we see what the budget parameters are of the budget bill that the Senate will pass. Yeah, that's right.
Some Democrats eyeing changes to the Senate's infrastructure deal ahead of a vote on the House bill later today. Republican Patrick McHenry pushing back on the more expansive parts of the bill.
we can deal with these societal challenges, but we don't need to deem everything as infrastructure. That's just silly. My constituents think it's ridiculous to call all these things infrastructure. We need roads and bridges. We need rail. We need airports. We need ports. We need a robust infrastructure that needs to be continually updated. And that's why I think we can come to a reasonable conclusion on infrastructure. That's what I'm for.
For more, let's head to DC and catch up with our Washington correspondent, Anne-Marie Hordern. Anne-Marie, what's going on?
Good morning, John. Yeah, a lot's going on today. Another day where infrastructure talks are really dominating the discussions on the Hill. We heard there from Speaker Nancy Pelosi talking about with the bipartisan infrastructure deal struck in between the Senate and the White House. She says there's a lot in terms of numbers, but not on policy. What the Democrats in the House want to see is a little bit tweaking of the policy. So instead of going out and just having a lot of new construction for bridges and roads, actually looking at potentially where can we maybe make more repairs. Also, they definitely want to see some of this money being spent on hard infrastructure when it comes to climate policies, and potentially, instead of going to the formal negotiations between the House and the Senate, seeing if they can get some high-level negotiations right away to get this through. Now, John, the White House, though, is working on making sure they can shore up the support of the GOP after the president did do that linkage between the hard infrastructure and then the multi-trillion-dollar human infrastructure plan the Democrats are pushing for. I'm not sure if you saw it, but the White House is putting out this fact sheet. Every single state, they are listing what is wrong with the state in terms of infrastructure and how they can go in with this money and fix it. What's interesting is we still have not heard yet whether or not Senator Mitch McConnell is going to back this. He said he hasn't seen enough where the money is going. His state, John, on this fact sheet, is getting by civil engineers a C- when it comes to infrastructure support. So really it's a PR campaign right now from the White House and the Democrats.
How long will that PR campaign go on for? Anne-Marie, I've had this conversation now for weeks and months. I was told it was days, not weeks, and it's been weeks, and it's been months. What's the timeline for this?
It's really up in the air in terms of the timeline. If they do immediate high-level talks in the House and the Senate, and then instead of passing their own two different versions of the bill and having a formal conference, we could see it much more quickly in terms of potentially weeks, if not possibly months, because August, everyone is pretty much out of town. But this administration is certainly looking to get this done, John, by the autumn.
Anne-Marie Hordern down in Washington, D.C. Our Washington correspondent. Anne-Marie, thank you. Academy's Peter Cheer focusing on the growth prospects of an infrastructure deal. Take a listen.
I'm looking very closely at what's going down in D.C., and I think not only do we have to worry about the size or think about the size, and hopefully we get a large enough size to make an impact, but we also have to take a look at how effective it's going to be. I'm really starting to want to make sure that it's going to be effectively spent, and that's the only way we're going to really see the economic growth. The downside is we spend a lot of money on bridges to nowhere and pet projects, and we kind of create the supply of treasuries without the growth element that is needed for markets to respond well.
Let's bring in Morgan Stanley's Matt Hornbank, Colin Martin and Charles Schwab for a final word. Matt, you mentioned the importance of this effort down in Washington. How important?
Well, look, I mean, in order to get to our 1.8% 10-year Treasury yield forecast at the end of the year, we need to get something done on infrastructure. Without that, John, we're almost certainly going to have to bring down our numbers. Bear in mind, all of our economic projections, growth, inflation, Treasury yields, the dollar, all of those forecasts are predicated on our view that this package, not just the bipartisan package, but also a larger reconciliation bill, makes its way through the Congress by the end of the year. So without that, John, we would expect lower interest rates and a weaker U.S. dollar.
Matt, let's build on that, because the recent research that's come from you and the team on the U.S. dollar is this conviction, this renewed conviction over a stronger dollar. Are you telling me that's largely dependent on what happens in Washington next on the fiscal side?
It's not only dependent on what happens in Washington, it also clearly depends on how the Fed responds to the economic data that it's seeing. And so the economic data is a very important factor in this. Once we get into 2022, when people start to think about the outlook for that year and beyond, infrastructure becomes very important. So it's an important element. It's not the only thing that's important to our forecast for sure.
Colin Martin, your take.
Well, we agree that we think the dollar can remain strong from here. Heading into the year, we thought it could continue to weaken, but we kind of shifted that view a little bit on the recent comments from the Fed and the updated projections, given interest rate differentials, given a more hawkish tone that they could hike sooner rather than later, that lends support to a stronger dollar. What infrastructure means, I mean, that's part of the puzzle, but for the dollar, we're not looking at that necessarily in the short run. But infrastructure is something that can get us closer to what our year-end target is for the 10-year Treasury yield. When we came into the year and we saw yields rise so much, infrastructure was certainly part of that. It was all based on expectations. Growth, inflation, infrastructure, increase in Treasury issuance. And then we sort of leveled off, and now we're kind of waiting. As you mentioned before, John, it went from days and weeks to now months.
Yeah.
The question is, when will we get something done? If we get something, we think something can get done, that can improve growth prospects, will lead to a slightly higher Treasury issuance, and that can pull yields up in the long run.
We've got to talk about the something. Let's finish there. Matt Hornback, you've talked about the importance of infrastructure spending down in D.C., got a bipartisan plan of a certain size, and then we've got another effort taken elsewhere that could be in the trillions. Which one do you need? Is it both? One?
I think you need both, John. I think with only the bipartisan package, I mean, almost certainly our coupon size estimates for the U.S. Treasury will come down, meaning there will be less issuance of Treasuries with just the bipartisan package. So you almost certainly need the reconciliation bill, worth several $1 trillion to come through in order to keep Treasury issuance stable, if that. So we definitely think you need both.
Matt Hornback, always good to catch up. Joining us from Morgan Stanley. Colin Martin and Charles Schwab. Gents, thank you. Coming up, the morning calls, and later, the outlook for growth versus value in Q3. Kicking off a brand new quarter, the opening bell 7 minutes away from New York. This is Bloomberg.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Five minutes out from the opening bell in New York City this morning. Good morning. S&P 500 futures 42.95. That's the price action. Here are some morning calls. First up, Summit Insights downgrading Micron to a hold after earnings. The analyst warning that demand and pricing dynamics are close to peaking. Next up, Piper Sandler raising its eBay price target to a street high 81. The analyst seeing a compelling valuation with tailwinds stemming from higher buybacks. And finally, B. Riley initiating coverage on Bed Bath & Beyond with a buy rating, street high $44 price target. The analyst highlighting management's turnaround plan and improving cost structure. That stock is positive by 3.8%. Coming up, new quarter, same debate. It's growth versus value. That conversation with UBS's Laura Kane and Peter Cicchini of Exonic Capital. From New York City, good morning to you all. 4 minutes away from the cash open. Equity's doing okay after 5 days of gains on the S&P. Can we make it 6? This is Bloomberg.
valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield. 23 seconds away from the opening bell in New York City this morning. Good morning. Coming into Thursday, 5 days of gains, 5 months of gains, 5 quarters of gains. On the S&P 500, 42.94, advancing a little more than 5 points on the S&P. The Russell, positive 12. The Nasdaq, just slightly softer, lower, weaker on the day. That's the opening bell. Switch on the board and get to the bond market. Your 10-year yield looks like this. On 10s, we are coming in almost a basis point at 146.12. Going into payrolls tomorrow, sub 150. The FX market, euro stronger. Euro dollar, 118.71, up a little more than 1/10%. And crude with a 76 handle on WTI. This rally in crude is picking up steam now, up by 3.44%. That's the cross-asset price action at the market desk with your movers. Here's Abby.
John, well, we're opening with another all-time high on the S&P 500. A piece of that action, MGM Resorts and DiDi. MGM Resorts popping on the news that they are buying out Infinity World's 50% stake in City Center Holdings for $2.1 billion. That makes them a 100% owner. Plus, they're also entering into a pact with Blackstone on 2 assets there in Las Vegas. So those shares higher off the highs, but nonetheless up. But DiDi Global, the China ride-hailing company, IPO'd yesterday, only up 1% yesterday. Today, up 10%. Not so shabby. As for the energy space, you were just mentioning oil on fire, above $75 per barrel for the first time since the fall of 2018. We're seeing it for some of the domestic energy names, the E&P names, your EOG Resources, Diamondback, Marathon Oil, Devon, big gains. But the party does not extend to crypto. Bitcoin is under pressure for a second day, back below $34,000. And you can see mainly red on the screen in the crypto space as folks wonder what way will the 30,000 to 40,000 range break, up or down? Time will tell.
Abby, thank you. 90 seconds into the session, 6 straight days of gains on the S&P 500. Longest daily winning streak going back to February this year. Another all-time high, top of the pile. Abby gave you a hint, a flavor of this already. Energy up by 1.41% after a tremendous rally this morning on a crude price. It's a new quarter. It's the same old debate. JP Morgan's Marko Kolanovic weighing in on the growth versus value debate and running the following, quote, defensive positioning in anticipation of the alpha variant doom resulted in a month-long rally in bond yields, value and cyclical stocks, and a decline in bonds and growth stocks. We expect this to repeat now as investors assess the so-called Delta variant. On the quarter ahead, let's bring in Bloomberg's Katie Greifeld for more. Hey, Katie.
Hey, John. Well, we entered the second half at an inflection point for that debate. Value was the clear winner up until June as investors piled into that reopening trade, but growth came back in a big way last month. The S&P 500 Growth Index rallied 5.6%, over 6% last month. That's as value fell for the first time since January. And John, that sounds bad enough, but June was actually value's worst relative performance against growth in nearly 20 years. And there's a few potential reasons for that. You had the Fed maybe tilt hawkish in June, bumping up that dot plot. You also had fears of the Delta variant emerge in a meaningful way, and that weighed on cyclicals while putting a bid back under tech stocks. And John, like you mentioned, you do have JP Morgan defending value here, saying that variant fears has been dropping alongside that tech rally. So we'll see if growth for growth, but volatility markets don't seem to agree. The NASDAQ Volatility Index has been dropping alongside that tech rally. So we'll see if growth can sustain these gains. But at this point, traders don't seem too worried, John.
Katie, thank you. Much more from Katie through the day on Bloomberg TV and radio. Let's build on this. Morgan Stanley's Dan Skelly joined us a little bit early this morning. This is what he had to say.
There is a realization here that the comps, that the earnings revisions are starting to plateau and starting to roll over. And with that, the cyclicals and some of the higher beta materials and energy that have led for so long, really since the vaccine news last fall, I think those are some of the things that could lead to the downside.
Let's turn to our guests, Laura Kane of UBS, Peter Cicchini of Exonic Capital. Guys, great to catch up. Laura, I want to come straight to you. I know you still like the cyclicals. You think there's still something to squeeze here. Why?
Hi, Jonathan. Great to be here. Yes, so we still are in favor of value and cyclicals. When it comes to value, there's really two main drivers behind this call. The first is interest rates. So we do expect yields to continue to move higher. So we think the 10-year will hit 2% by the end of the year. And that helps value from two perspectives. So on the one hand, we have that financials have the largest weighting in the value index, and financials do well when we have yields that are rising and we have a steepening yield curve. We also see that rising rates helps in terms of the relative valuation between value and growth. So growth stocks are more negatively impacted when rates rise. This is because they're priced on cash flows that are further out in the future. Now, the other pillar of our call is our expectation for economic growth. We see that historically, value stocks tend to outperform growth when we have GDP growth in excess of 4.5%. That is the environment we're in for this year. That's the environment we're in for next year. So we think it's too early to walk away from value, and also those cyclical, those economically sensitive parts of the market, industrials, financials, as I mentioned, consumer discretionary, all of these areas should continue to do well as this economy continues on its path of reopening.
There's some real optimism there. Peter Cicchini, do you share it?
Not quite. I mean, there's a lot to unpack there. Interestingly, I would say our view here at Exonic is that, yields will rise to 2 to 2.5%. And a steepening yield curve, all else equal, might be good for banks. But if the reason for the steeper yield curve is a hawkish tilt by the Fed, and let's be clear, the old school construct that bond vigilantes are at play and that markets are controlling the yield curve when there's growth in inflation is really somewhat anachronistic at this point. The Fed is in control of the curve, and the Fed reaction function is dominant here. And we're seeing it right now. We're seeing it in twos. Twos are up about 10 basis points from before that 16th meeting. Fives are up 20 basis points from 70 to 90. I expect that to bleed into tens, but it's not necessarily going to be good for banks, for example, because loan volumes have been weak and will probably weaken as rates rise. Cyclicals themselves, when we look at retail, up 100% since the 2019 high. Transports up 30% from the 2019 high. Metals and mining up 40% since the 2019 high, all in line really with commodities. And I've been bullish of commodities, but I'm very skeptical that commodity-based and cyclical-based companies will be able to pass all those costs through to customers, and that demand elasticity will get the better of them, and volumes and prices will eventually react by falling, as will earnings.
Pete, we can talk about the energy piece of that trade in just a moment. Let's just focus on financials, on the banks, Laura. This relationship between the banks and what is happening in the bond market, you were very clear about pointing out what you think will happen with the bond market and why you think that will influence, say, the banks. Is there any chance that that relationship can decouple to some degree?
Well, I would say where we differ is that we do actually believe that lending activity will actually pick up. So we think that with the economy improving the way it is, we are actually expecting to see a lot more business investment. We think CapEx is going to pick up. And with that, we think that should spur more borrowing from companies. So we do actually think that the economic recovery is going to be another tailwind for the bank. So it's not just about that yield curve steepening, which, like I said, we do anticipate, but it's also about this economic recovery as well. So it's really both of those drivers that work. And also valuations are undemanding given that both of these drivers are behind our call in the banks. So we definitely have a strong conviction there.
Yeah, just quickly, Laura, if you can, remind me of your 22 GDP forecast from 21 to 22. What is it you're looking for? For what?
So for U.S. GDP for next year, we're expecting just over 6%. So we think we'll decelerate a bit from this year, which is we're at 6.8% to around 6.5% for next year. So
wow.
And then in terms of how that translates to earnings, so we're expecting earnings growth for the S&P of 40% this year and 8% next year, and that does already bake in a haircut for potential tax increases.
So there's a real belief with you and the team that this growth picture can persist into next year. Pete, is that where there's some daylight between you and the team over at UBS, that you think there could be some significant deceleration from this year to next?
Well, I think the numbers are going to continue to print pretty strongly across the board, and growth will continue to look pretty good, and as will inflation. And again, that's the important piece here, because my view is that persistent inflation is more likely, I think, probably than many others. And in February, when I came on the show and discussed this with you, when I mentioned that we might see a 5% CPI print, people's eyes rolled into the back of their heads. But in fact, we've seen it. So I think the other piece of it, though, John, is not about growth. It's really valuation. When we look at how much prices have appreciated and how much work earnings will need to do, it's very hard to bridge that gap in my mind, given where valuations are right now. The Russell 2000, for example, still on an LTM basis, is not earnings positive. And so small caps in particular, to me, seem quite vulnerable given higher leverage there and extremely stretched valuations.
What I often find amazing about this job is that I can have two really smart, well-educated, experienced individuals who look at the same market, and one says the valuations are good, they're attractive, and the other says they're not at all. Laura, I want to turn to you for a final word on that. What is attractive about the valuations for the cyclical parts of this market?
Listen, I think earnings can do the work to kind of counter that point. And in terms of the valuations, listen, they're not necessarily cheap, but when we consider them versus where interest rates are, yes, interest rates may be on an upward trajectory, but they're still relatively low. So for us, we think that equities still look attractive versus bonds, and we still think there's a lot of attractively valued opportunities there. Again, within the U.S. on those cyclical and value names. We also prefer small and mid caps, and we're diversifying internationally as well. So there's opportunities to be had around the globe where we feel that stock valuations are not pricing in the earnings rebound that we're expecting in many parts of the globe.
Laura Kane of UBS, alongside Peter Cicchini of Exonic. Let's head back to the markets just briefly. We'll head back to them and get a catch-up on what's happening in the energy sector in a moment. 42.95 on the S&P going into the opening bell. Abby, what have we got?
John, right here and now, let's get a little more color on the energy sector, because it is, of course, as you were mentioning earlier, the best sector on the day. Lots of the big oil names popping. It's also the best sector on the year. And something really interesting emerges if we take a look at a year-to-date chart of oil and energy. Up until just recently, both climbing pretty much in tandem. But more recently, oil is pulling ahead of energy on the year. Oil up about 56% on the year. We have energy sector up about 45% on the year. That gap may suggest that perhaps we're going to have some kind of catch-up trade for energy, or maybe oil is going to pop back down to the level of oil. But either way, both on fire. And then in terms of the individual names that are really climbing on the year, you have Marathon Oil, a double in 6 months. Diamondback up 94%. Occidental Petroleum up 81%. It's really pretty incredible. If there is more of a catch-up trade for this sector, wow, big, big moves.
What a run. We've got to talk about that up next on this program. OPEC meeting for a second day. Energy stocks rallying, crude through 75, taking a look at $76 a barrel. That conversation up next with your S&P 500 with a tiny move through 4,300, which incidentally is your median year-end forecast of the strategists we survey on Wall Street. 43.05, up by 0.2% this Thursday morning, and heading for a sixth straight day of gains, the longest daily winning streak going back to February of this year. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more. They might just need just some practical experience in an Australian kitchen.
I have not from Australian friend now, but in the kitchen I have many friends.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The demand is recovering, which is good, and then OPEC, the OPEC group has got discipline in terms of returning some of that spare capacity back into the market, and then the U.S. E&P companies have exercised capital discipline through the process as well. But I think that's all very, very helpful. I think the real question is, when all that comes, when demand recovers to pre-pandemic levels, excess supply comes back into the market, what is the price accrued at that point in time?
Crude topping $76 a barrel on WTI, up by 3.5% right now. Brent crude, $76.61, up by 2.67%. This with OPEC expected to agree on gradual output increases with demand picking up and the global economy recovering. A man who knows this market better than me, much better than me. Bloomberg's Julian Lee joins us now. Julian, I want to start with where we are this morning. 76 on WTI, Brent at 76.59. What's driving it?
The OPEC meeting at the moment. Ministers are gathering. The OPEC ministers have met and concluded their meeting. They dealt with procedural stuff, administrative stuff for the group. This is one of their 6 monthly meetings that they have to hold. There will now be a gathering of the Joint Ministerial Monitoring Committee. This is a smaller committee of ministers led by both Saudi Arabia and Russia that will start to look at the supply-demand balance and what they do about production, and then there'll be a full ministerial meeting starting later on today. What seems to be coming out of that is that they are proposing a very gradual increase in output over the rest of this year. We're hearing numbers suggesting something like 2 million barrels a day being added, not in one go, but sequentially over the next 5 months, perhaps at a rate.
The whole point of Brexit is to diverge.
And that is less than the market was expecting, and probably less than had been priced in as of last night, when people were expecting that the increase would be at least 500,000 barrels a day.
Well, it's certainly fueling some life into this rally this morning. Julian, thank you very much, sir. Julian Lee there of Bloomberg, up 3.5% on WTI, 376, the first time we've seen that since October 2018. Back with us is Laura Kane of UBS, Peter Giacchini of Exonic Capital. Laura, I want to come to you on energy specifically. often, and I've repeated this often through this week, when I ask people about the energy sector, even if they like cyclicals, they'll just turn around and say, I don't want to get into the business of predicting the crude price. Do you like the energy part of this equity market?
We do, and we've liked it for some time. And again, the drivers there are predicated on our positive view on the growth outlook. We also feel that the sector has been, deeply undervalued. And it also, something that's often forgotten is that energy stocks also offer quite strong capital return to shareholders. So, putting it all together, we've had a positive view on energy throughout this recovery, and we continue to like the energy stocks as we expect oil prices to move higher in the coming months. So for us, it's a positive story.
Pete, it's a slice of the market, the commodity side, that you've liked. Does that view still persist going forward from here?
It does. I think Laura and I can find some common ground on this one.
There we go.
Yeah, no, look, I've liked the commodity trade for some time. Certain parts of the commodity trade from a company or a perspective I have not liked. The energy names I still do like. And look, OPEC is in focus right now, clearly. But, the fundamental economic recovery alongside lots and lots of stimulus and large deficits leads to speculation in every commodity market, just about, and oil is no exception. And I think that's another reason why we're seeing $76 on WTI.
Pete, some of that run-up, though, that we saw in the commodity market really corrected through Q2. Yeah. Didn't see that in crude. Why not?
Well, I think that's because there are some real idiosyncrasies to WTI and to Brent, and part of that is OPEC, right? And by the way, everyone's speaking of these corrections in lumber and copper. We're still double digits and in some cases still triple digits above 2019 highs in some of these commodities, whether they're soft or hard. Up I think about 60% in the CRB commodity basket. So yeah, we've corrected, but it's still a long way.
Okay, traders, I'm placing an order to sell short British pound. The price I'm looking to sell 138.02. So 138.2. The price I'm looking to sell short British pound. So if you're looking to trade right now British pound, we still hold long position on British pound. So right now I'm open another new position to sell short British pound. Okay, so I'm going to have two positions. If you don't have a clue, if you don't know why we're doing and how we do that, you need to get the strategy and to find out more from the information published in the strategy, or you can register for our webinar, 17th of July. I'm going to have a webinar, it will be Saturday, where I will explain all about arbitrage, how we trade, how we can open in different directions, positions, everything you can find from our webinar. So all other people who already got our strategy, please, if you didn't find this, we show you this pair. You can trade right now, and you still have time to place an order. Okay, I'll speak to you later, guys.
That we've got more of the same, even though the gains have kind of tailed off a bit in the last few moments.
Unreal. Dave, what a run here today and this morning as well. Got some data out moments ago. Mike McKee has the numbers. Hey, Mike.
Keep it quick, John. It is the market PMI. We're going to be watching the ISM at the top of the hour. The market PMI comes in at 62.1. That's down from 62.6. A little bit less than was forecast. Basically says the manufacturing economy is moving along at about the same speed.
And Mike will run you through the ISM at the top of the hour.
Okay, guys, position open, short position on British pound. Okay, at 138.2. 138.02, sorry. Okay, stay with me. If you already have two positions, that's good and you know what we're doing. Otherwise, stay with me and we will go through all these two trades and we will close them in profit. Okay, stay safe.
trading in and around the median year-end price target on the S&P 500, just as we kick off Q3 and the second half of 21. Through 4,300, up 10 points, advancing 0.2%, a sixth straight day of gains on the S&P, the longest dated winning streak going back to February 8th of this year. That's the price action. Here's the trading diary. What you need to be watching through the rest of this week. Auto sales out through the morning. Fed President Bostic speaking this afternoon, plus President Biden speaking from Miami. And finally tomorrow, the payrolls report. And what a lineup we've got for you for Payrolls Friday. Mohammed Al-Arian, Rick Reeder, Anastasia Amoroso, and Mike Collins joining us tomorrow morning, 30 minutes after the payrolls report drops. From New York City this morning, I'll see you tomorrow morning. This was the countdown to the open. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease beside disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.